got Garrett. Hey, Garrett, how are you?
Good, Rich. How you doing?
Yeah, I'm hanging in there, man.
Good.
Getting things done. So, Thomas, tell us a little bit about yourself.
My name is Garrett. I live in New Jersey. My partner and I are out-of-state investors. We're up to 67 units out of state. And we just started in a new market in Northwest Pennsylvania and Ohio. We generally have 2 to 3 active flips per month and try to pick up a rental every month as well. So,
Are you you do single family flips too?
We do single family flips. We're actually 2021. We're gonna try to flip an apartment building. So we have the funding and everything lined up. So we're actively seeking a value add apartment building.
Where are you looking for that?
We'll anywhere this side of the Mississippi. So our target markets are Tulsa, North Alabama, Nashville, Pittsburgh, Cleveland, and Columbus and Fort Myers.
Fantastic. So listen, anybody listening, we're also on Facebook Live, so we'll probably get a lot of people listening on there too. Anyone has anything like that, hey, listen, get in touch with Garrett or get in touch with me. I'll get in touch with Garrett as well, and we'll see. That's awesome. Where in New Jersey are you at physically?
I live in Barnegat, South Jersey.
Oh yeah,
not far from LBI.
Yeah, I go to LBI every summer for a week. I love it there.
Yeah, nice. I used to live in Somerville. I know Doug a long time.
Yeah, well, I live in Hillsborough, so I'm out of Hillsborough right now, and we don't really have an office. We do have an office, but we're all virtual now. I mean, Doug is down in Florida actually, and we're looking.
I used to share that office. I had an office inside the Hillsborough office of JDL Ventures.
Oh, in Somerville?
In Hillsborough.
Oh, okay.
Yeah.
That was probably before my time.
Yeah, it seems like forever ago.
Awesome. All right, Garrett, nice to talk to you. So
you as well.
Let's cruise over to I see Caesar's next on my list. Caesar, how are you?
Yeah, hello, how are you doing? I'm doing great. I'm close to I live in Branchburg, New Jersey. So that's and I'm a realtor. I'm doing this right now part-time, but I'm also a fix and flip, and basically in like Somerset County, Essex County. I think I'm right now buying a property from Doug, in Scotch Plains to flip. So I'm have some money in my 401k, so looking for joint ventures too. So in this area also.
Okay, fantastic. I mean, listen, we do joint ventures too. So if that's an option, definitely let's we can hook up after this meetup and see what you got. It's mostly single. How many flips have you done?
Well, years ago I did about 3 of them on my own, and then I joined ventures with some other people. And I spoke to Doug that I was selling a large property in Florida. It just happened this month, so I got that money kind of sitting right now in my 401k, some cash. So right now I'm trying to get into a lot more, especially right now when the market is hot. You there?
Yeah, Paul, you're screen sharing. Could you?
Can you guys hear me?
I do. Hold on. So, Paul, you're screen sharing. Can you get out of the screen share? Hold on one sec, guys.
Even before you with one shot every 6 months.
Do not take Prolan if you have low blood calcium, are pregnant, or allergic to it, or taking Giva. Serious allergic reactions like low blood pressure, trouble breathing.
Okay, I got out of that. I'm sorry about that. So yeah, so Caesar, so awesome. So you got any flips you're currently doing?
I'm buying one right now from you guys in Scotch Plains, so that will be a project for the next few months.
171 Victor?
I think it's 515 Willow. I'm doing it with Dina.
Oh, you're doing that with Dana. I think
Yeah.
Call your doctor
Dana
today
is
and ask
here.
about Prolia.
Hi,
Yeah,
Dana.
I'm here. I'm here, Doug. Rich, I'm sorry.
You gotta mute Sammy over there. It's coming on. I
Hi,
don't know.
Cesar.
Hello, Dina. Hopefully we'll be out of this by tomorrow, okay?
Yeah,
We need to start.
yeah.
So
Anyway,
you're the Caesar I see on the emails. Now I know who you are.
Yeah, we need to meet. I know I met Doug a few months before, and to join venture with him because he's right, he was right here next to me in Somerville or Bridgewater. So Hillsborough, I think that's when I met him. But now that I finally sold my property, now I got the money to move. So maybe we should meet.
Fantastic. Yeah, definitely. All right, so awesome, cool, Caesar. Let's move over to Paul. Paul, can you talk?
Yes. Can you hear me?
I can hear you great. How are you?
I'm doing good, guys. I'm glad to join you guys today. And this is my first time to be in a call with you guys, and really appreciate you guys putting this together, especially at this time.
welcome.
I'm doing real estate investment. I would like to start doing some flips, flipping houses. 4 years ago, my brother and I joined the Fortune Builders. You guys probably know about the Fortune Builders there. Programs. And we went through some courses and boot camps. We set up our company, and we get overwhelmed with too much learning. And
Paul, you're breaking up a little bit. Paul, can you hear me? All right, listen, I'm going to put Paul on. Paul, just hold on there for a minute. Let me just go down the line, and if you let me go to Balashali. Is that how you say your name?
Yes, this is Vashali.
Vashali.
Yes, I'm good. How are you?
I'm fantastic. You want to just kind of introduce yourself? Tell us a little bit about you.
Yep. So I work full time. I'm in IT, but I'm looking for something to invest like part time. Like my intention is to buy and hold for the rentals, probably in New Jersey. But I find that New Jersey is a little bit quite expensive for buy and hold rental perspective. The number does not make sense where I live, so mostly I guess might explore into the Pennsylvania area.
Okay. Yeah, I mean that's I think a definitely better place to go. Garrett, really quick, is that why you don't really invest in multis in New Jersey and apartments in New Jersey?
Yeah, the property taxes wipe out any buy and hold pretty much. Just to give you an example, in one of the markets we're in, $150,000 ARV house, you pay $800 a year on property taxes. The new market we're in that we're closing tomorrow in Pennsylvania on a couple houses, we're going to have $1,500 a year on property taxes for the rentals.
Yeah, big difference.
Big difference.
Yeah, and the law and the tenant laws are very, very tough in New Jersey, aren't they?
Yeah, and the tenant laws in the places that we're at, we chose because they're either cash flow appreciation with good tenant laws, where
Right,
30
exactly.
days they're out.
That's important too, because
Yeah.
you're trying to get a tenant. You want to get a tenant out, and sometimes it could be near impossible.
Yeah. I mean, we don't have that problem because of where we are, but
Right.
yeah, I know a lot of guys that do. So
Yeah, I hear you. So Vashali, where have you done anything before, or is this kind of brand new to you?
I have my previous house where I lived. I'm in Central Jersey, and I own townhouse, so I'm renting that one right now. And yeah, so that's the one rental I have, and like looking into buying more.
So you're looking for like 2-family, 3-family?
No, right now I guess since it's the first one, I'm looking for buying into just a single family maybe, and
Renting.
Maybe duplex if possible, but mostly I want to first one. I just want to start with the single family.
Okay, and like you said, you're looking mostly in possibly Pennsylvania, right?
Yes.
Okay, fantastic. So anyone's got anything over in Pennsylvania, please, let Vishali know. And we'll see what we can do. So thanks so much. Thanks so much. So let's move down to Mr. Beck. Are you there? I don't know if you can answer. This is Doug's father.
I am here. Good evening.
Hey, Mr. Beck, how are you?
All right. I can take up all your time, but I'll make it short and sweet.
Sure.
I am Doug Beck's father, and I spent 40 years with J&J, primarily in the financial areas, and retired 10 years before Douglas. Excuse me. I spent 10 years in retirement before Doug got involved with real estate. And then I sort of advised him in many different ways. I actually own a short-term rental home in Florida by Disney World. Caesar, by the way, I also live in Branchburg. Doesn't want to believe me here. I live in Branchburg also, Arrowhead. You know where Arrowhead is?
No, not really. I'm right next to the White Oak Park.
Okay, I'm across the highway down toward Flemington. On the south side, past the Chubb Way and that area over there. Anyway, but I've been working with Douglas for the past 6 years. He's been in business and helping him in many different ways. I know Garrett from when he was in Somerville, bouncing around and going to meetings there at the Office Evolution, etc. And I just sort of watch what's going on here and see make sure things make sense. All right.
Awesome. Thanks, John. Appreciate it. It was good to hear from you. All right, so let's go to Mark. Mark, are you there? All right, so let's go to Mark.
Can you hear me okay? I'm here.
Yeah, Mark, how are you?
Good, good. Sorry, I just had to unmute my phone. Let me try to take it off of Bluetooth. I'm driving. Hold on one second. Okay, can you hear me better?
I've got you pretty good. Go ahead.
Okay, good. So, yeah, my name is Mark Del Priore. I was born and raised in New Jersey and moved out to Pennsylvania, where I live now in the Lehigh Valley area, a little south of there. So doing a little bit of networking in the Lehigh Valley. So if anyone's looking to do anything out there, feel free to reach out. I actually own a digital marketing firm where we generate Facebook ads and whatnot. I'm starting a new venture. You know, it's small right now, but I mean, my digital marketing firm is national and international, and we work with a lot of different verticals like insurance, mortgage, stuff like that. But specifically for investment properties, we're going to start generating our own ads. And what we're looking to do is a little bit different than what a lot of wholesalers are trying to do in the space, because it's getting very saturated. We're actually looking to partner with some mid-sized to large-sized investors, or even smaller if you have enough zip codes that you cover. And we're looking to generate the ads and deliver them. We'll pre-qualify them first once they come in to see if they're actually a motivated seller looking to sell for wholesale, or if they're looking to do retail, which then we have real estate agents that we partner with and send the referrals to. But then what we're looking to do on the investor side is we'll give the leads away for free. We'll pre-qualify them to a certain degree. We'll give them away for free if it falls within your zip code area and some of your criteria. And then on the back end, we will be looking for some kind of a compensation as a wholesaler type of contract, but we won't actually take the contract, the house under contract. We'll just leave that for the investor if he's interested and has a conversation. And we'll just be looking for some kind of a compensation, which we haven't really figured out all the details, and it could be kind of custom for whatever investor we work with. But so we're open and we're flexible to figure out what the compensation would be. It's just something new that I thought about, since we're pretty good using Facebook to generate some really high quality leads. And then from there, right now we're focusing in the Lehigh Valley area, and we have a couple partners and investors that we work with. But we could probably focus in the majority of zip codes in New Jersey if we need to, or if you're in other states, we can focus in those zip codes. So that's kind of what we're doing. It's a new venture. It's something that we're going to try out, see what kind of how it takes and how good it backs out for us. Because obviously we got to put the media out on Facebook and then recoup our money plus a profit, once the deals are actually closed by the investors. So we'll wait a little bit for the investment groups, to close the property and somehow figure out a way to compensate us in the beginning or at the end. But that's overall what we're doing. And then down the road, the whole idea is to learn more about the process and then eventually get into our own investing and flipping. So.
Excellent. Very interesting. I mean, I definitely like to talk to you a little bit more about that, Mark, maybe sometime tomorrow or whatever, but if you can put your maybe information in the chat box, if everybody's interested, definitely hit Mark up and see what he can do from you. I see Doug is here. How you doing, Doug?
Hey, what's going on, everybody? How you doing?
We're good.
Hi, Doug.
What's going on? What's
Hey,
up?
Doug, how are you?
How you all doing? I can introduce myself, but I want to see if everyone else can go first, if that's all right, because I'm sort of bringing up a couple of links I want to share with the group.
We got a couple more, so why don't we get through that, and then we'll go through all that kind of stuff. So Pinches, you're up next. Are you able to talk?
Hi, Pinchas. It's Dana. We spoke a while ago. How are you?
She's still on mute. So, all right, we'll come back to you. If you, Pinches, if you come back on, just let us know. How about, I think it's Ike?
Hi, everyone.
How are you,
my name
Ike?
is, I'm good. Yeah, it's Ike Drago, and I've come for these events for a while. The one before the COVID times, these days, I'm happy to join you guys virtually. So I'm a real estate investor. I'm interested mostly in buy and holds. However, also looking into flips, but I don't have a lot of time at my end, given that I do work. So I'm looking for partnerships where we can explore synergies. I have a background from Canada to the US here and have done 2 deals in the past 1 year, but looking to increase momentum and do more, putting my money to work, and also the experiences I have right from Canada and in the US.
I can help you put your money to work.
Yeah.
Where are you looking to flip? Like, what areas are you looking for in?
I'm interested in single family, and also lately have developed more interest in multifamily, either triplex, fourplex, or more. So
what areas are you looking in now?
So I'm looking at Philadelphia, also New Jersey, eastern part. So looking at areas like Lopakon, Washington, Phillipsburg. Yeah, other areas where you can do this at reasonable numbers and be able to make profit.
Awesome. Yeah. So listen, a lot of people, I guess, want to be in Philadelphia. I guess that's good. Maybe we ought to start looking at Philly, Doug. All right. So hey, Ike, awesome to meet you. Let's just move on to Sammy. Sammy, can you talk? Sammy? All right, let's move on from Sammy. Let's see, who else have we got here? Is it Haney? Buran? Haney, are you there? We were doing good for a while. How about Tim?
Sure. Can you hear me? I'm driving.
I got you good, Tim.
Okay. Yeah. So I've been involved in real estate for about the last 6 years or so. Mainly private lending deals. 1 to 4 family. Work with a handful of experienced fix and flippers. Involved in both debt and JV partnership equity type deals, and average probably 3 to 5 projects at a time. Yeah, that's that in a nutshell. That's what I have not gotten involved in buy and hold in rentals or anything like that, just given the economics of the returns around New Jersey.
Yeah. Okay. Awesome. All right. So I want to keep moving along. So I got one last person, Dana, who I know very well. Dana, you want to introduce yourself?
Me? Is it
Yes,
me?
you.
Hi, everyone. How are you doing? My name is Dana, and I am with JDL, and I help in dispositions, meaning I help dispose the properties that we get under contract, either with direct sellers or wholesalers. And so I would be happy to connect with all of you and get your email addresses and see which areas you're investing in. And also I heard several of our attendees say that they want their money to work for them. Well, I think I have a great opportunity for you guys. We currently have private money lending opportunities where we will do an earn and learn program as well, meaning it's a win-win for everyone. You get to invest your money, and we'll get to mentor you as we go through the renovation and the fix and flip of the projects.
Yeah, and I appreciate Dana bringing that up. So I just want to interject. So we don't know exactly who's here at the moment, and we're not sure how well you know us. So just out of respect to the fact that this is being broadcast, we want to make sure that, you know, we'll have that conversation with anyone who's interested, but we can't go into too much details in this forum, unfortunately, at least not at this time.
So yeah, I think that's everyone that was able to speak. Dana, thanks so much, and just a shout out to Dana. She's really been doing a lot of good stuff for JDL on the disposition side. She actually came in on the acquisition side, but started to levitate more the disposition. So if you guys are looking for properties, talk to Dana. She can definitely help you out. All right, so I think I've talked enough. So Doug, I'm going to turn it over to you, and you know, we'll let's.
Absolutely. Some hats on a little twisted here. I don't know what that's about, but so thank you everybody for being here. I'm going to do my best. You know, it's hard when you're on a video meeting here to kind of look at a camera. You know, I'm not used to being on a TV show or anything like that, or a news station. I don't think most of us are. But I want to see, you know, if I can try to connect with you guys, being as if we're in the same place and in the same time. So thanks again for being here. And again, my name is Doug Beck, and I think a couple of folks mentioned some of the things that we do, so I'm not going to rehash all that, but I'll just let you know that my real estate investment journey started really before we went into business. I started thinking about real estate probably when I was in college. I just didn't know how it would fit into my life. Seeing my father has a short-term rental house down in Florida that he's been using and also renting out for the past almost 15 years or 16 years, I think. He's on here. I think I heard him before. You know, that particular property and hearing about that and that story, if you would, and how that all works kind of got me interested to some extent. And then one thing led to another. You know, went to college, graduated with a business degree, went on to work in corporate America for about almost 10 years and worked at Johnson & Johnson doing IT and also procurement work. And basically after about, I would say 7 years at that time, maybe six, 7 years, started really thinking about an exit strategy to leave that world of corporate and look for something that I could do on my own. And so I did that and was lucky enough to find a mentor, a guy out of Arizona, in fact, who I want to give a quick plug to because I think it's worth mentioning. And, you know, he's somebody that helped me get started. So there's a guy named Cody Sperber out in Arizona, and kudos to Cody and his team. He runs a company called Clever Investor, and they're actually doing an event that I'm going to be attending tomorrow with a couple other high-level real estate people called Avengers Live, or I think it's what it's called, Avengers Mastermind Live or something like that. So anyone who's interested in more information on that event, it's actually like the whole weekend. You can shoot me an email. My email is, I'll just put it in the chat, but it's just doug@jdlventures.com. You probably got an email from us at some point in the past. If you haven't already, make sure you sign up for our list. You can go to jdlventures.com and just fill out the form about, being a buyer or a contact of ours. And we'd be happy to work with you and help serve you whenever resources, whether it be wholesale deals or investing into projects, whichever. With that being said, I've had a lot of great people that I've been surrounded by, and people that have helped me, get to the next level. And so I wanted to be a little bit of that, or our company to be a little bit of that for you guys tonight, and kind of help, paint a picture and have a discussion with everybody around, what to expect. This year has been quite interesting, to say the least. And 2020 is just all over the place with a lot of things. So I'll tell you, there's obviously certain things going on. And if you can't see in the background, I got like sort of a blockade there, which is my whiteboard, but you might see some little feet walking by because my kids running around the background, and my wife might be back there too. So that's one example. We're here working from home. We have an office in New Jersey. We also have an office in Florida, where I'm living now. I live in Florida since July, if you don't know. And so beautiful Sarasota, Florida. And the weather is pretty nice overall, I would say. It's been getting a little cooler in the past few days, and it's starting to cool down a little bit. But I think, it's sunny outside, which is nice. Not now, but in general, every day practically. So that's a nice thing. And anyway, it's a different world. But I hope that everybody's staying safe. I hope you had a great Thanksgiving. I think that goes without saying, but I want to thank you all for dedicating some time to be here with us tonight. The intention is to go through, our perspectives, our observations, our input, our experience. I can't say I've ever been through a pandemic, so I don't think anyone really has. And I don't think we can say that, we've been through, most people here, it sounds like, haven't been through even a full real estate cycle, including myself, in terms of being in the business. So there might be a handful of you that can speak to that, which we can get to in a little bit. I'm happy to have people contribute their experiences, so long as you're, qualified to do so. But ultimately, what I'd like to start with would be basically to show a couple of things on my screen, if that's okay with everybody. And I just want to quickly offer out opportunity for anyone who didn't have a chance to introduce themselves to do so now. Is anyone interested in saying hello if they hadn't have a chance already?
Yeah, I do.
Right.
Is that Hanny?
Yes, Hanny. Hi, everybody. How are you guys doing? Again, my name is Hanny Barhan. I'm here to mainly, network. I am I have some investing experience that I started a couple of years ago. I believe, can't remember who it was. I too am a Fortune Builder student. Joined a few years ago, did a little bit of investing. I own a couple of properties in Union City, West New York, New Jersey, and with my partners, a couple of properties in the Boston area. But then a couple of years ago, I transitioned to being a real estate agent. Currently working with Jonathan Steingraber with Signature Realty. I know, Doug, I recall seeing you at NJRSN.
Yeah, I feel like we've met once or twice, right, at John's events.
So, yes, we've done a few roundtables and introduced exchange cards.
Cool, man. That's awesome.
And so, I'm basically here to network, help any way I can, and make connections and hopefully work with you all.
Very good, very good. And just one more time, is it Hanny or Hani?
Hanny.
Hanny. Okay.
Yeah.
Anybody else? Thank you, Hanny. Anyone else that wants to quickly say hello that didn't have a chance already to say hello and introduce yourself?
Yeah, I'm hello.
Hey, Paul.
Hi. Thank you, Doug, for giving us an opportunity to, to join you guys tonight. I'm here to network with you guys, and happy to be among all the very experienced investors. I started my career as an investor about 4 years ago, joining the Fortune Builders. But me and my partner spent all the time just trying to know everything before we jump in. So we made that big mistake and we get overwhelmed by the information overload. And, you know, we literally stopped in 2017 without even doing any deal. And mind you, my partner is my elder brother. He's a civil engineer, specialized in master. He's a structural engineer actually. So we didn't even put that, you know, into it in our advantage, and we stopped doing the thing. It wasn't until about 2 months ago that we said, listen, man, the way things are going, 2021 is gonna be that year that there's gonna be a lot of opportunity. Why not, you know, jump in and start over and you know, do things the right way and, you know, get our feet wet and just make it happen, you know?
Right.
Well, that's why tonight I'm here. I'm glad to hear from you guys and to learn from you guys. And I'm ready to, you know, to move on this year.
Awesome.
Yeah.
Very cool. Appreciate you being here, Paul. And I just want to make sure one more time, any final folks, and if you didn't have a chance and let's say, you know, we don't have time or whichever, we go too quick, I'd like you guys to pop it into a chat. Also, anyone who's not speaking, if I could ask you to stay on mute and then you come off of mute when you want to speak, that'd be great to keeps everyone's audio clear. Any final chances for introduction? Jump on in. Okay, perfect. So let's do this. So again, if we were sitting in the same office or same room together, typically we would have that, you know, conversation as far as networking with one another, and then we'd have a whiteboard or a presentation. I do have a whiteboard, but I don't really need to use it tonight. I don't plan on using it really. I'm planning on sharing my screen and basically showing you guys a couple of links that really are pretty simple to find on the internet. I'm happy to share those links with you directly, but it's some prompts for our discussion. I think that it sounds like mostly everybody, if not everybody here, is either actively in real estate in some capacity or looking to get active pretty quickly. So that's a great thing. And it sounds like everyone has some experience with respect to understanding single family, you know, fix and flip. A couple of folks, it sounds like buy and hold, and also some multifamily. So that's a good mix. In fact, what I could ask is if everyone wouldn't mind taking the time while we're talking to kind of put into the chat, and don't be disruptive. We'd ask that you don't self-promote, you know, too much besides what you already did as far as networking and such, but you want to put in a couple blips about your specific focus so I can kind of go back to that and reference it. I didn't have a chance to write down everybody's stuff. Just kind of talk about, you know, what kind of strategies you've been focusing on, talk about maybe some of the goals you have for 2021 and some of the challenges or obstacles you've had over the years or over the past, you know, few months even, or the past year, specifically challenges you've had. That'd be great to know. And I think that, you know, really the way that this meeting works best and what we've seen happen in the office when we're having them in the office is really to have an interactive discussion and not so much focus on just, you know, us talking and you guys listening, although we're happy to do that as much as we can to give value. We really want this to be not a presentation so much as an interaction and a discussion. So hence the reason why the actual meetup group is called a mastermind. I'm not sure if anyone has familiarity with that term, but essentially the concept is to share, you know, ideas with like-minded individuals looking to elevate themselves kind of with a common goal or a similar goal, and kind of share resources and experiences to do so. And so that's really the intention for this event. And that's what we've been doing since day one, which is probably like almost 5.5 years ago we started doing it, I think. With that being said, I'm going to go ahead and start sharing my screen. And like I said, I can't really prevent some background noise, so hopefully it's not too bad. I have a decent microphone. It's supposed to cancel out some of the noise. I may have to excuse myself a couple of times because the noise, like my son, my youngest, is in the process of getting to bed right now. It's bedtime for him, but he's not having it. I could tell by what I'm hearing. So nonetheless, we're going to do our best, but bear with me for a little bit. And then if you guys are able to, you could pop on our Facebook page and share this with your friends to get some more people interested in knowing what we're doing. Or if you have any friends that you want to send a direct invite to, there should be a link, I think, on the meeting somewhere. That's one of the cool parts about doing it virtually, is that we can actually share it out to people. So on the bottom of the screen, you should have a thing that says participants. And actually there's a little icon that points up like an arrow. On my screen, at least, I'm not sure if you have the same, but it says invite. And you can go ahead and just click on that and then send it out via email, send it out via, you know, a URL. You might have already done that. And if you did, we appreciate it. We appreciate getting more folks here that can share experiences and talk with us. But let's dive into it. So let me go ahead and share my screen. And like I said, if everyone could just pop into the chat box as we're doing this, sort of like a review of what you're looking for and what you're looking to do, what you've already done, obviously, and also maybe some challenges you've had, that'd be super helpful to take a look at. So, you know, I'm on a website here that not many real estate agents actually like, coincidentally, I think, from what I hear, because it costs money, from what I understand, to be promoting, and it's sort of like almost anti-realtor, which is so odd to me. Realtor and also Zillow are kind of a paid service, and I'm not that familiar because I'm not a real estate agent myself, but I will tell you that there's a whole world, an advertising world, if you would, for real estate investors, and people that are looking to really get themselves out there. If you don't know, if you're a real estate agent, you know, you can check it out. There's different opinions on that, but let's not get into it for now. As far as advertising, you know, it kind of, some people don't like it. Some people think it's the greatest thing since sliced bread because they get leads. So tonight's discussion is not about that, but just we could talk about it if you have any questions. But anyway, we're here because, you know, sites like realtor.com, Zillow.com, there's other websites on the top, which I'm going to show you guys. They actually have a lot of information behind the scenes. You may not realize it because you typically go there to look up a property, you look up, you know, comps, or you look up something else on the internet with that particular site. So if you notice, the URL actually has the word research in it. So it's realtor.com/research. And this is the first one I pulled up just by doing a Google search. And to be honest, I haven't checked this lady Danielle's information, but it says she's a chief economist. So, and it was written a couple of days ago, actually yesterday. But fundamentally, I just want to skim through to kind of point out a couple of things. I don't know if I have an annotation deal. Hold on.
We're only seeing like a picture of your family.
Yeah.
Oh, really? Oh,
Yeah.
sure, on the wrong side.
You guys all
okay.
look very nice, by the way.
I just, yeah.
Oh, there you go. Well, there's my family.
There we go.
Family and my kids. There's my there's realtor. Look at that. What do you know? Well, hey, now you get to see my dad and the picture and my kids, the wife. So anyway, sorry about that, everybody. But I do recommend putting your family in front of you, you know, pretty frequently. It's on my screen all the time, so I look at it every day. Anyway, so what we're doing here is we're looking at realtor.com. We're looking at other websites on the top, which we'll get into. And essentially on realtor.com, you know, I was saying, like I said before, the advertising aspect we're not getting into. You can see clearly on the top it says advertise. So they're trying to promote that. But fundamentally, you know, this is big business. So what does that mean? That means that they have money to spend to not just help people advertise, but also to actually, you know, hire people to write up articles like you're going to look at here if you look at this article. So that's kind of a good thing if you're looking to research, you know, as long as it's not, you know, slanted one direction for whatever purpose. In this case, I think it's a pretty good readout as far as if you take the look at it and kind of understand what's going on. So this infographic is kind of one of my favorite things that I saw when I was looking around for some articles to reference. Let me just zoom out a little more if I can get it on a screen. So, you know, in essence, you have types of markets. You have a buyer's market, a seller's market. The projections here, and I tend to concur with this because look, we're at December right now. We're basically entering into 2021, and I don't see any easing up in terms of the economics of sellers being scarce and buyers being prevalent everywhere. So it's a seller's market. So what does that really mean? I mean, we'll get into some of that, but essentially at a high level, it means that you're going to be paying a premium, generally speaking, for your average property or your buyer. If you're a buyer of you know, rental real estate, if you're a buyer of traditional, you know, single family home for your family, if you're an investor buyer, it's all really connected because from what I can tell and what I talk to other people about, essentially we're within a supply chain, and real estate happens to be the commodity or the industry, but the supply chain basically starts with the home or the property and it goes up to, you know, the end user, which is basically the retail buyer, which is someone using a mortgage to buy that particular house, that particular property. And as wholesale companies like JDL and as renovation companies like Douglas J Development, or you guys, if you're renovators, you're sort of in the midst of that supply chain dealing with the current owner, which is basically the seller, obviously, or the manufacturer, if you would, of the property. If you know, they didn't build the house necessarily, but you're dealing with that source, that raw materials is the house, right? And you're coming in as a wholesaler to acquire that at a low enough price to be able to add a markup and still sell it to a distributor, i.e. a renovator or a landlord that wants to buy a discounted property, but you want to be able to sell it at a profit, and then it'll still leave some money in the deal for them. So if we think about that, and unfortunately I don't have an infographic to show this, but if you just draw it on a piece of paper, if every exchange, like you typically see in a supply chain, you have an increase or a markup, then frankly, what you're looking at right now is going to make it even more difficult to do things like wholesale, because you're having to deal with a seller's market. So the people you're talking to as wholesalers are typically sellers, or real estate agents sometimes, but still they're talking to a seller, representing a seller. And so you're dealing with negotiation challenges because they're aware that it's a seller's market. They're aware that you are one of many and they're one of few, right? And so that's going to persist based on what I'm seeing here. What I'm going to show you in the next couple of things as well, for the as long as we can tell right now, for all of 2021. That's what it seems like. Now, that doesn't mean that there isn't uncertainty. So I'm going to scroll down a little more. It's just, if you can see down here, COVID plus double dip recession. So the current pandemic, it says, already creates a lot of uncertainty, but with a widening gap between the employed and unemployed, plus expiration of the CARES Act protections, the economy could take a massive hit. Now, look, at the end of the day, we don't really even know officially, and it's not a political debate. We don't really know officially. There hasn't been an electoral college that met and voted, and there hasn't been any other process about our presidency in the United States. So we don't even know who our president's officially going to be. We have hunches based on what we're being told by news media, but we don't know officially what's going to be put into play. There's a lot of pressure coming from all different angles, all different sources. So the fact is that uncertainty is one thing. Then you have people looking for jobs and trying to make sure that they're staying employed and getting paid right and stuff like that. That's another pressure for the world of the people, right? The population of people. And then you have the fact that there's this economic sort of challenge or whatever for buyers of real estate like us, if we're buying as investors, and there's pressures coming from the fact that there's shortage of sellers and a surplus of buyers. So kind of when you combine all that, you just, my suggestion at a high level for everybody, we're going to drill into this, is to be very cautious and to be very mindful that things could shift at a moment's notice. And that's not based upon having to have experience. That's just logical thinking, I think. Would you guys agree? Can someone just say that they agree so they get what I'm saying? Anybody out there?
Yes.
Can you guys interact a little bit? Because I can't see your faces, so I just got to ask you to speak, if that's okay. Does anybody have a difference of opinion so far? Do we? And then we're not going to debate it per se, but I'm just curious to see what the feelings are in the group, and if there's.
I agree with this totally.
Agree.
Right. So
disagree.
You could go against the grain for us tonight. Like, we're not here to, like, create a form of people with the same belief. Like, we're here to have a real discussion. But I would like to ask that we have maybe 20 to 30 minutes of real discussion of what we're trying to cover, and then we can have an open dialogue. We'll have interactions in between that of course, but as far as any sort of like real pushback, I think that it'd be hard to explain that if you're asking me. I can't think of a way that you can come at an angle considering the current world. Now, what's likely to be you're thinking about is, well, Doug, what about the real estate cycle overall? Like, why isn't the fact, let me come off the screen share for a second. Why isn't the fact that the real estate cycle is at, like, what is it, 12 or 13 years at least, if not more of an upswing, right? I think that's roughly where it's at. Why isn't that playing into it? How is that playing into this? Well, it definitely could play into it, but everybody that I know that's at a higher level than we are, like these guys are doing hundreds of deals a year, thousands of, like, crazy amounts, like large groups that I know, that I listen to, which I'm going to show you some more information. Those groups would basically say that, it's almost like the real estate market cycle has basically reset in certain ways, or potentially reset, depending upon how things pan out with multiple factors. So I don't think we can look at historical data too much to show where we are with respect to the shift of the market going into a buyer's market in terms of plateauing and kind of trailing off for the home prices, right? I think, in fact, with mortgage rates being so low and with the surplus of buyers and the shortage of sellers, it just, until those buyers kind of go away and the sellers, become more prevalent, and mortgage rates go up, I really can't see why, real estate numbers are going to change very much in a negative way. In fact, if I look at the projections based on what's being talked about, let me go here, and the data that's being projected, you can see home sales are going up 7% they're projecting in this particular thing. And then mortgage rates on the move, so 3.5% roughly. This will make affordability an issue for buyers. Well, I'm not a mortgage guy. I can't really speak to that. I've borrowed money before as a mortgage, like a traditional real estate, residential mortgage. I've also, let me admit some folks here. Rich, I don't know if you could admit, I don't know if the meeting room is on for this. Can we turn that off? Let me see here. Can you turn off the meeting room if you go to security on the top, just to let people come in for now? I don't see why they have to be admitted. I don't know if you can see that on your screen.
Yeah, I can. I don't know how to do that.
If you can't do that, it should pop up on your side to let people in. Looking at so that's cool. I think Joe just got in, so that's great. A couple of things here. I'm not going to comment on every single item per se, like as far as detail, but it says here the rise of millennials, no longer just dominating an entry-level market. Millennials are now taking over as a move-up buyers if they have children and need more space. I could potentially not debate that, but say that there are people that are looking for flexibility. Typically, the millennials are looking for, there's a lot of renters in the millennial base. And so, in fact, where I currently live, it's not a secret, I don't mind sharing with the group here, I currently rent where I'm at. And there's a whole story as to what that looks like and why that is. But Some people might think that I'm crazy, which I am a little bit crazy, I guess, and we all have our moments, right? But the fact is, renting a property as a primary residence is actually not such a bad thing. It's just that mortgages have become so prevalent that people pitch the mortgages and you don't look at all the factors. And I know that's very debatable, by the way. You have principal pay down, there's all different things we could talk about, but you can't make money from your own house. And so if you look at it from that perspective and you look at the fact that the market is very uncertain, potentially, you have to consider that you're buying it essentially, even though it's your own residence. If you look at it from an investment standpoint, you are potentially buying, if you buy a person, and no disrespect to anybody who owns their own home, because it's not a bad thing. I'm just saying you have to consider where you bought it at and where you're looking to exit it at. Just like anything, any investment, if it's considered an investment in your mind, you have to think of your horizon of time of which you're staying in that property and when you're buying it and when you're going to look to sell it. And I would say that, people, at least in my bracket, in my age group, I'm not looking to land in my forever home just yet. I'm planning on that soon. But when if you have a forever home, then you're kind of excluded from this. But if you don't have a forever home where you're at, you got to think about, well, how are you going to make sure that, the economics and the financials make sense of leaving where you are whenever you plan to move next. And so we're talking about being, not even at the top potentially of a real estate cycle, which means you're going to have to ride the wave down and you might not come out depending when you bought your property. It's all different things. So fact is, like, there's a comment here about millennials. I wanted to just touch upon the fact that there's still a strong desire to rent properties. So that's a good thing. If you're a landlord, there's going to be a large audience, if you would, for renters, I think. And I know that. So fact, there's a lot of different things. You could check this article out and kind of read more. I'm going to scroll down. Seasonality, home sales, talks about different things. It says they're still staying 7% here. I saw a couple other things. Remote work is obviously a big thing. So this is actually impacting the fact that you want to have maybe an extra bedroom in your single family flips. So if you're typically flipping, let's say a 3-bed, 2-bath, 3-bed, 1.5 bath type of house, you may need to be looking at 4, because that 3 plus an extra space for the home office is becoming more and more of a reality that people need. So you got to just consider that you got to give somebody space. In fact, I had a call with somebody about a property in Florida that we're in the process of renovating and selling. And that particular family needed an extra space. And they specifically said that was a potential deal breaker if we couldn't make it right in terms of putting a space in the house for them that was parceled out for a home office. So very, very important in today's time. Lots of cool stuff here. They give you different markets and such that you can look through. So I heard some of these markets mentioned on the call today. They talk about, sales growth and also price growth. So that's obviously different. Sales is the number of transactions. Price is the actual price that they're selling for. So interesting dynamics. If you're into statistics, you can check this out. And there's a lot of different details. Let me zoom back at normal, and let's also open up for any questions or interactions or feedback, what you see so far. I'm just kind of taking a pulse from the room, the virtual room. Any questions or feedback?
No, one thing I would, and this is just coming from me looking at all the stuff that's been going on with COVID. I get a little scared because, and I'm just being real here. I see some of these companies going out of business, small businesses going out of business, people downsizing. So that worries me as far as in the future down the road. It might not be hitting right now, but a lot of people are losing their jobs, because these businesses are going under. And even some big companies, are downsizing. And I'm just worried that this is going to come and bite us in the ass, but I just don't know when that's going to happen. And, just being real, that's what's on my mind.
Absolutely. So I'll share a quick little story on that, Rich. That's good. That's good feedback, man. And it's a very real question or concern that people should have is like, hey, I want to make sure that, like, considering the fact that there's commercial businesses going out of business and such and all kinds of different things, what about that? Like, that doesn't sound good. I agree on that. I think that you have to be very careful if anyone is an investor in commercial real estate in terms of like businesses or mixed use buildings, those kind of things. You have to be very cautious because there's a lot of people that are moving away from that model and going into either a shared office environment or a completely remote environment. Large companies are even doing that. Our company is sort of hybrid right now. We do have a shared office in both New Jersey as well as Florida that we're currently using. We downsized out of our office that we had. It was about almost a 1,500 square foot office in Hillsborough. That was our dedicated space just for our business. And I think Garrett's here. So what's up, Garrett? He did use an office there for quite a while. So that was cool. And it was good having you in the office and good to see you here too tonight, man. But ultimately, I would say it's something you really got to consider if you're in that space as an investor. And I'm going to make the conversation a little bit more relevant for investors in just a little bit. We're going to kind of gear up to that. But I think that, you have to consider that even when there's articles like this being promoted about, home prices going up and such, you notice at the bottom, the sort of footnote about the fact that even all this looks like that's the case, there's still a strong possibility that we may face an issue as far as COVID's uncertainty and the double dip recession, as they called it, and everything else going on in the world. So it's kind of like proceed with caution. If I can summarize it, and it's, by the way, it goes without saying, our meetings, we have a lot of in-depth discussion, but none of this is meant to be financial or legal advice. We're not CPAs, attorneys, or anything of the sort. We're just other investors that have, experience and perspective that we want to share, and hopefully create a forum to do that with you all. So that being said, if I can make a recommendation, I would be very cautious about buying rental properties in most markets in New Jersey, at least. I know there's a couple of folks investing out of state. If you're looking at areas that are typically rapidly appreciating, areas that have a lot of transactions, those areas, as much as they can appreciate, that's historically shown that those areas will also depreciate just as fast because people are going to sell off. Kind of like, how the stock market sort of works, I guess, where you have people bid up and then it goes, next thing you know, they're selling off kind of thing. So I would be very cautious with that. I would look for, and what we've been looking at, we've done in terms of our renovation business, Douglas J Development, we've actually picked up a lot of properties in the A+ towns, like, Bergen County, pretty much any town in Bergen County. We have a couple projects in Essex, better parts of Essex County and better parts of Union County, Morris County, Somerset County, et cetera. So those are the kind of areas that we've only been focusing on for the past probably over a year at this point, since beginning of last year, basically. And so I'm still happy to help other folks that want to buy in more tougher areas, like the urban communities and the parts of Newark and East Orange that we've done some business in as far as renovations that we didn't have a good experience in, frankly. It's no disrespect to those areas, but just not for us. And I feel like there's a lot of risk associated. If you notice, I was on a Hard Money Lenders website today, just looking at something to see if they had a joint venture type of thing or whatever they were offering. So it was different than what I'd seen. But they mentioned that they're not looking to do any sort of lending or investing in any high crime areas. I mean, it's just not to knock anyone who's doing that, but you have to consider there's a reason why people look away from those areas, because they know that there's chance for their property to get damaged. Look at what's going on in the world with the riots and all different things going on in these really urban communities. It's very tough. You have to consider that as a real estate investor. To be real with everybody, you got to just not just look at it from a financial standpoint, but also consider the economic and social factors of things. So all that being said, what does it really mean? It means that we're going to have a challenge, actually. In short form, we're going to have a very big challenge. We already are having challenges amidst everything else in the world, but focusing on buying deals at the right price is a challenge, right? And so it's very important that you're dialing into what's working, and it's very important that you cut off what's not working as far as any sort of strategies you're using that would be costing you money potentially, that are not producing results. My son is looking at the window there. I don't know what he's doing. Give me 1 second, guys. Rich, I'm going to pass it to you for a second. I think they might need me for something. I'll be right back.
Yeah, I mean, exactly. So and to be honest with you, I don't foresee any kind of rapid drop or anything. If anything, I think it'll be fairly gradual. I'm not worried about all of a sudden this whole thing crashing down and us just getting crushed. I really don't see that happening. As a realtor, I mean, the market is just hot and it just has not been slowing down. I think Dana, you want to jump in there for a sec?
Yeah, I guess the point of this conversation that may help everyone is, where is the opportunity for us real estate investors, right? Considering the data that the house prices will come up, the interest rates will come up, the millennials are going to buy. So where exactly, are we positioned, or can we position ourselves going into next year? Because we all, this year was difficult because, as you know, it was very hard to acquire properties because one, they're not really foreclosing on the properties because of forbearance. And we have a lot of properties, or there's a lot of properties in the market that, are for auction or, but they're occupied. And even in Zillow, there's not a lot of opportunities because it's a seller's market.
Yeah.
So I think what's important to know and understand is that how can we position ourselves for next year, and what should we expect in terms of acquiring properties for investments?
Yeah, exactly. Definitely the,
Back, guys, just so you know, I'm going to come back on video in a sec. Sorry about that.
There we go. Doug's back on.
If you see my son in the back, he had some of his stuff for school kind of all scattered on the floor, and he was knocking on the door. So I had to get all of his stuff out of the office here because he needs to finish something that he's got to do for tomorrow. So anyway, that's what's going on there. So I heard a little bit of what Dana was saying. Dana, you want to kind of summarize that, and I can try to address it and help talk about that a little bit?
Yeah, I guess what we're trying to do is, figure out where our opportunities are for next year, considering what the data is showing us. Like this year was a tough year for everyone because, not everyone didn't know how to act to the virus, but more importantly, there's a lot of in Zillow or, with direct sellers, they're very firm on their prices because the market is hot. And also there's a lot of properties that are, foreclosed, but they can't move because of the COVID regulations of the forbearance rule where, so things like that. It was quite a challenge to get acquisitions or to be in acquisitions because there's not a lot of properties to acquire because of certain factors. Right. So analyzing the data that you've given, where should we position ourselves going into next year so that we have the best, window to acquire properties as investments?
All right, so check it out. So I think that it's a loaded question, but it's a great perspective. So the fact is that, like I said before, nobody here, including myself, unless someone is able to, I'd love to hear your perspective on this, can tell us or predict with certainty, right? Because that's the challenge we have is it's an uncertain world. No one can say for sure, this is what you have to do no matter what, because this is going to work every time. That's not a possibility as far as I can tell. Does everyone agree so far? That's unfortunately not possible for us to do, but we have to.
No matter what the times are, there's always going to be risk involved, especially in real estate. It's just making the best decisions and keeping your risk at the lowest you possibly can.
Right. So it's a measurement of how much, not if it exists or not. That's really a question of risk, right? In terms of saying risk will exist in real estate and real estate investing, whether we want it to or not. It's always going to be there. There's risk in many different ways, which we're not going to list out right now, but I can give you probably 10 or 15 different ways. A single deal has risk, but I would tell you that the level of risk is something that, number one, can be pretty much determined in a deal, an individual deal, by doing that analysis of what you would normally do as a desktop analysis of the financials and also the location, all different kinds of stuff, but also of the market, right? The market risk kind of is like an umbrella over the whole world of what you're focusing on. So it's all of us. And so if you look at that perspective and say, well, what about the market risk? I would say the market risk is very high right now. So then you say, okay, if we know the market risk, based on my opinion, if I'm talking to myself about this and talking with the team, it's market risk is very high. My risk tolerance is pretty high also though. So I can live in that market and be kind of okay. But for some other folks that may not have that same appetite for risk, you may not be okay participating in the current market. And that's okay as well. It's okay to not participate. It's okay to observe, in my opinion, right? Knowing what I know today, and I wouldn't necessarily have said this in the beginning because I didn't know better, but knowing what I know today, it's better to say no a lot of times. And you're going to say no most of the time, frankly. You need to say no. If you say yes too much, you're going to get yourselves into deals where I know somebody I'm working with, a client of ours, is basically, telling me, and it's nothing that they're doing wrong, but they're saying that, Doug, is it okay to pay $30,000 or $40,000 over what it should be paying based on my calculations just to get the deal? Because I want to get a project. I need a project. I need to get going. I wanted to start this business. I'm like, no, it's not 100% not okay. And by the way, I'm not talking about paying a wholesaler, because I do truly believe that if a wholesaler does a great job, if for example, JDL does a great job, and I think I saw Caesar here. So Caesar, I'm looking forward to finally doing a deal together. I don't mean that in a bad way. We've been talking intermittently for a little while. So it looks like we're going to be hopefully putting that together. I'm excited about that. But if we do a good job, hopefully we're going to show you here of getting this deal done, and we've done a good job negotiating and everything like that, and you're happy with it, then naturally, if it's baked into the price and you do your analysis and the price makes sense, then the wholesaler can make 5,000 or wholesaler can make 5 million. I'm not ridiculous numbers here, but it shouldn't matter. But what I'm saying is, once you calculate, let's say you calculate your numbers, including a wholesale fee, and you actually have to overpay hypothetically in a deal $30,000 or $40,000, that's not okay, right? Because now you're overpaying truly. I heard somebody talk about being a private lender and hard money. So that person, I think it might have been someone named Tim, right? Is Tim here? If you're available.
Yeah, sorry, I was on mute.
That's okay. So Tim, let's have a quick, if you don't mind, let's kind of have a quick discussion on this, because you're also lending out and investing capital into projects, it sounds like. So from your perspective, you know, when you have, let's say, a potential borrower or potential partner brings a deal to you and they said, hey, Tim, you know what, I'm buying this at blank LTV. What typically is an LTV that you would be looking to lend out at, like roughly? The most you'd want to lend out, let's say LTV of ARV, meaning property's worth for $300,000 and the most you'd want to lend on that one. So, you know, $300,000 property, it's all done. What would you lend typically?
Yeah, I really don't go above, you know, the 65 to 70 range. I try to stay 65 or better. And again, I work with more experienced people that have been in the business for, you know, more than 5 years.
Yep.
And I mean, I, you know, now that I'm talking here, that's one of the, you know, you guys are hitting on the points of, hey, it's a seller's market. The deals I did that I got into JV and just straight lending last year that are all basically going at, you know, eight offers, you know, going way over ask. That's great, but you know, buying or doing the next deal which is what we're going to be faced with in 2021 is the tough. It's going to be a tough market for finding new deals.
Right. Yeah. I mean, and kudos to you for, you know, and your clients or whoever your partners basically working on deals that you can have that scenario. Cause frankly, you know, either you're pricing it really low, which I think there's definitely, don't get me wrong, there's definitely companies that can put out a property for sale and get bids well over asking. But I think that also some folks will have a different approach. There's different opinions about the pricing strategy, right pricing versus price it high, get lower offers, that whatever. So we're not necessarily talking about that, but I think what you're referencing is that you're getting offers over asking. But just to kind of, I'm going to talk about that in a second. Let's just nail into the LTV of ARV comment. So just to make sure everyone understood. So Tim is in the business of lending. He does mostly business, sounds like, with experienced folks. And I can tell you that his answer is practically universal to all the different hard money lenders that I've talked with and that I do business with. Most of them will lend at 65%, maybe 70% of loan to value of ARV. So the way you calculate that, to put it very simply, 300,000, let's say, is your ARV, your after repaired value. You multiply that by 0.7, it turns out to be it's 210. So the max loan that he's going to be willing to lend you on money-wise is 210 on the $300,000 property. That leaves you at $90,000, but that doesn't include selling costs, and that doesn't, in terms of the spread, it doesn't include selling costs, holding costs, or closing costs, or financing costs, which is another element that you got to consider. So when you shake it all out and you do like your average kind of deal, and this is a very rough average, but I would say what I tell folks is you're looking at roughly about half of the gross is what you're going to end up netting if you do a good job. Meaning that if you hold the property for a reasonable amount of time and in most deal sizes. So if that's all true, that means on that project, you're going to make $45,000 and Tim's company might make 10, 15, 20,000, depending on how it's structured. And then also it might be a partnership, who knows? But if lenders will typically make, you know, between, you know, let's say 0.5 to 1% per month on average is what a hard money lender typically charges. Plus they have origination, all different kinds of stuff. So knowing all that, the point here is that lenders have certain LTVs that they work off of. And frankly, you cannot avoid, if you're using hard money, you won't have a choice but to follow that sort of guideline unless you're willing to put more equity and more money down. So when you put more money down, it might seem like you're doing the right thing because you think you got a great deal that maybe your lender doesn't see or something. But I can tell you that, you know, from personal experience of having this happen a couple of times and also other people's experiences, typically from the people I know, the inputs I've had, when you do that, it's just not a good story. Like your lender typically knows more about it because they have certain governance models and certain practices that they use to vet out the deal. Getting an appraisal, for example, doing an analysis of the scope of work, getting your budget established, et cetera. All these different factors play into whether the deal makes sense. And there's a methodology behind the scenes as to why 70% or less actually works. And we're not going to go into that tonight, but I'm happy to discuss it with anybody. If you're willing to set up a call, one of my team members, myself, for 10, 15 minutes, we can go through deal analysis. Just let us know. We can help you understand that. But the point is, we can't be overpaying. We cannot, okay? Because even if the market tells us we have to, we should just sit on the sideline, wait for the right opportunity. Or we could also do better at negotiating, which is a whole nother story, but I can touch upon that if people want to talk about some strategies there. But frankly, if you move over for a second and say, you know, what Tim mentioned also around the offers over asking conversation. So let's just discuss that for a moment. So it's great when you get offers over asking, especially if they're significantly over asking. But I will tell you that from multiple inputs, I haven't had this happen recently, but I had it happen once on a project previously, like a couple of years ago, where we received an offer where we needed it to be, but the property did not appraise, right? So now you're seeing people, I see feeds on Facebook all the time, people talking about properties not appraising, properties not appraising, properties not appraising. That's a real problem because the market is trying to appreciate faster than what the comps are able to support. And as a mortgage lender, not me, but as other mortgage lenders out there are lending capital out based upon the property's value in today's market, they're using appraisals and it's all connected, right? Appraisers use comps from usually 6 to 12 months or less ago, like 12 months or less, we'll say 6 months ideally, but 12 months or less. And so if that's the case, you're going to see comps this year that are pretty strong, but there may not be enough to support that value that's just 30 or 40K, 50K of a sale. Now you're the seller as a renovator, you're selling this property. There may not be support for that future, that value that is really kind of painting the future. And so unless you get a cash offer, which is great, I've had that happen in a few projects down here in Florida and also even in New Jersey a couple of times where you get a cash retail offer, someone that just has cash, they want to buy it that way. God bless them. They look at it as their own residence as an investment, and that's fine. I'm happy to sell them a house and have them pay whatever number that we can agree on. That makes sense. But the fact is, unless you have that, you're dealing with appraisals. And that's usually on both the buy side as well as the sell side. I don't know if, do you guys get that? Does that make sense? Like you're dealing with having to get an appraisal now when you go to buy and also when you go to sell. So we have to consider the opinion of the appraiser, and really what's that reflecting is the current market, not the future market. Or the old market of what existed, 2 years ago, for example.
Yeah, exactly. It's very tricky, and it's it's very important. And just one thing that I've noticed too, I've noticed a lot of flippers out there that ended up overpaying for these properties, and it's sitting there half finished, and they're looking for like me or other people to come pick this up and finish it for them. And then they tell me what it is, and I'm like, well, you guys way overpaid for this thing.
Yep.
And they're stuck with it. So I always say stick to your numbers, man. And like sometimes you really want a deal, but if the numbers don't work, don't fabricate stuff. Don't do that.
Don't stretch.
Yeah. Get burned.
Exactly. And I would say another point I wanted to make, and that we can open up for more dialogue, and I can also share a couple more documents that I had here. I think that if I can give a recommendation also, and I promise you that this is not self-serving, that may sound like it at first, but it's really for the benefit of the group. And a couple of folks already mentioned this, that they already have these relationships with other people. Now, more than ever, in my opinion, is a time to joint venture in a big way with anyone that you trust enough and that you see an opportunity to joint venture with. And the reason why is because if you think of the economics equation, again, of supply and demand, if we as a demand pool, if you look at it from the pool of demand, right, exist in a massive lopsidedness of our pool compared to the pool of sellers, the supply, then the demand could either just like go away and walk away from deals that we're talking about, not do deals, just ignore stuff, whatever, and not overpay. And some people will overpay, but that's where they match up and then it buys and it closes. Or the demand could potentially work together as sort of like a coalition, if you would, right? And I don't want you to read into this too much, but a coalition as in like a joint venture, not a lot of people, just talking about 1-to-1 maybe, or a couple of people coming into a partnership and fundamentally representing the same information to the same supply, i.e. the seller, and present an opportunity to establish a true value based upon real information that's available. And that you could go down a rabbit hole, if you would, of like information that you might be reading into my suggestions. I'm not saying probably most of what you're thinking right now. So what I am saying is that hypothetically, if let's say we had 5 properties available right now and there's 15 or so people here, instead of 15 people fighting over 5 properties, you should match up as 2 or 3 and go in together on those 5 properties, hypothetically, if that was the case. And if that represented the market of supply and demand, or more like it's probably 15-to-1 or not 15-to-5, so or 15-to-3 maybe, or something like that. And because really what other ways are there? You could either overpay, you could somehow get a great deal, which is a possibility. You could also partner up and have work with someone else that was able to get a great deal, that was able to negotiate better probably than you were, or find information and use that as leverage to negotiate. Or you could just do nothing and sit on the sidelines, and that's actually okay. But it's okay only if you acknowledge and have a consciousness and a purpose behind not doing anything. It's just this, you can't not do anything if you actually want to do something, if that makes any sense. And if you want to do something and you purposely need to do something, like to create income, for example, for yourself, maybe, you know, honestly, maybe real estate flipping right now is not the right thing for you, frankly. I mean, I don't know that you have enough certainty in real estate flipping to say, I'm going to buy a project this year and make my salary of what otherwise I would make in a corporate job if you used to work in corporate. It's probably not the right time, if you ask me, to do that right now. I mean, there's already a crap ton, pardon my French, of buyers out there that are fighting for the same deal. So look to leverage your experiences. I'm not trying to push any people around or discourage you from doing this, but the market really doesn't need any more demand. It needs more supply, actually. So if we can help it to get more supply, that's great. And that's where like wholesalers come into play, where they're doing direct marketing, they're doing negotiations with sellers, they're getting foreclosure properties or pre-foreclosure properties or probates or any other types of unwanted type of properties. They're doing that work. We do some of that as well. We work a lot with other wholesalers too, though. It's not a secret that we kind of pull together an army of wholesalers effectively into one place. And that's where we find our true value, serving a community of real estate professionals and investors that want to buy those opportunities and utilize our experiences as real investors combined with the wholesale deal and the elements of like things like having a scope of work, having, you know, just information about the budget that's actually relevant and accurate, having the ability to actually do the work with our construction management company at Douglas J Development to be able to proceed to actually serve you and not have a partnership necessarily, just do it on a fee by fee basis, you know, per deal. There's all different kinds of stuff that JDL sort of tees up and brings value on that are some things that many folks here may not even be aware of. And that's kind of okay, but it's not okay, right? We're talking about it tonight for a reason, and it's not a sales pitch either. It's just to extend our value. And that's why we do these events, is to really bring light to those things that we can offer as far as value goes. I want to get back into the market, but I want to open up for any questions or comments first, and we can talk about sharing my screen and showing some additional stuff.
Hey, Doug.
Hey, what's up, Garrett?
What's going on, buddy? So I'll start by saying I disagree with everything you just said.
Wow.
No, just from my experiences, I think you're 100% right when it comes to New Jersey, and I think Dina had, you know, she asked a question earlier on what should we expect going into 2021, and from my experience, what you should expect is to try to learn to get comfortable investing outside of your area.
Right.
We are closing on a flip tomorrow. It's a 35 to 40,000 profit range. Even if we screw it up, we'll be above 25. I'm closing on a rental next week. We bought for 12,000. We're putting 10 into it. It's got a 55 ARV. We can rent it for 900 a month. We're just buying that one for cash.
Right.
We've got private money lenders, people that have never thought about it before are now thinking about it, calling us saying, hey, I know you guys do this. I don't want my money all in the stocks. I don't want it all in this. I don't want it all in that. What are you guys doing? So I would just say learn to be a little comfortable outside of your main market. It's scary to close on a house 6 hours away from where you live, but we got 67 units that are 14 hours from where we live.
Now, let me ask you this. So you know, again, and I tell this to some of the people that we do the mentorship with, you know, if this is outside your area, say it's in maybe even another state and stuff, how do you get information about the market and about ARVs and comps and all that stuff? What do you do to do that? Because you're not in that area, you don't know that area, and it's a big thing.
Right. So I'll preface just everyone, you know, because no one on here knows me. I am completely mobile. I can be anywhere within a day, and I can stay in that place for a month. So the market we originally were in, North Alabama, Southern Tennessee, I moved there for a year and commuted back and forth to New Jersey for a year. My business partner, he commuted every other week to North Alabama. So it's a big commitment up front. The new markets we're in, just get up there, made 1,000,001 appointments, talked with every roofer in town, everything, property managers, construction, spent a week up there, get MLS access. We have we retail list in Alabama, we retail list in Tennessee. We're getting Pennsylvania and New Jersey licenses now. So we go all in. I go and get the license. I'll have my New Jersey license in a month to start looking some stuff in South Jersey. Pennsylvania license is in process, and we just go all in on it. And actually, and to one of Doug's points is the best deals we've ever done are the ones we've walked away from.
Right.
And,
Man.
you know, don't push yourself into a deal. We canceled 2 deals last week because we returned to the numbers and said, we gotta force this one through a little bit.
Right.
And we just canceled it out. You know, it was and then someone else bought it. Someone crazy, you know, bought it like 3 seconds.
So you do agree about not overpaying, at least that part you agree with.
That part I agree with. Definitely don't overpay.
Yeah.
Yeah. I think
there's a lot of great markets out there. There's a lot of great markets out there.
So that's almost like in my mind, and maybe I'm a little weird, but like I almost segment what you're saying as almost a different thing than what most people are thinking about. Because most people are kind of in their lane, which is okay, right? But you're saying like think outside that lane a little bit and say, hey, look at a different market completely. Don't just focus on what you know today, New Jersey, right down the street from you or something like that. If you broaden that horizon, for sure, Garrett, I agree with you on that. In fact, I did some of that. I didn't do it the magnitude that you're doing. I did some investing with somebody in Cleveland, though.
Yeah.
I'll tell you, the experience was decent, but it still wasn't what we wanted, but
it's not for the faint of heart. Like if you got heart problems, don't invest out of state.
Yeah. I mean, so you guys know, like, this was not planned. I just want to show something. This is literally sitting on my desk right now. So like, this is a book.
I got like 8 copies of that.
There's only one book on my desk, and this is the one book because frankly, I'm currently an out-of-state investor for New Jersey myself personally. Like in terms of, I live in Florida now, so I'm having to deal with remote stuff, and so I'm saying to myself, there's some structures and some processes that landlords, for example, have to have when they're remote investing, like Garrett's talking about. There's also some structures and processes that fix and flip investors have to have if they're running a business from another state or in another state. So that's something to consider. Now we have people in New Jersey, of course, but I still have to consider my own mindset. Like Garrett's saying, you're going to make yourself go a little crazy sometimes because you're not able to see the physical house or drive to it or drive by it. You have to deal with other things like pictures and information being provided to you. So it's a little tricky, but I agree with you in the sense that you can definitely broaden your horizons, and that will open up a lot of options and opportunities to folks that may not be as obvious.
That usually scares the heck out of a lot of people. You know, and I understand why. And you know,
I get scared every time. I'm scared for closing a motor. I'm scared.
Exactly. No risk, no reward, though. But you know, one of the things I know a lot of you guys probably can't do what Garrett does and go and live down there and do all that kind of stuff. But you know, just for me, you know, even in New Jersey, when I'm out in an area that's out of my comfort zone, I don't know very well. Just, you know, familiarizing yourself with that area, talking to a lot of top agents in that area, and understanding about that market and learning about that market first before you dive into it is extremely important. You know, because you can really get burnt. There was one property that you know, we had brought in from another wholesaler, and we had thought the ARV was a certain number, and you know, because I ran comps and stuff, but I didn't know the area. You know, and then we found out later by talking to a real in that area that no, this area is different from that area, and this is your real ARV, and it's a good thing we knew that because we almost got burnt on that deal. So, you know, familiarizing yourself and networking with other agents in that area is an easier way to you know, make sure you don't get burnt, and you know, having someone with their boots on the ground there to help you out. I think you guys would agree with that.
Absolutely.
Yeah. So I have a question for Garrett. So it's also about, you know, your style of investing, right? So is it fix and flipped or buy and hold? And when you go to other markets, what is the strategy for that market? Or is it necessarily what's comfortable for you, or what your goals are?
We like to flip a house first in a market before we commit to a buy and hold, especially some of the buy and holds we're doing, like, you know, a $12,000 house we're buying. People think it's, you know, the first reaction is like it's a crack house. It's not. The guy just didn't want it anymore in the worst way. So that one we're buying because it's just so cheap. It's whatever. But ideally, flip a house in the market. In our experience, we've done it 4 markets now. To make sure it's a market that you want to stay in and that the contractors are good, and you know, it's just kind of how we've done it so far. If you buy it low enough, you know, worst case scenario on a flip, you walk with zero, and then you learned a ton. Like we had talked to Doug, we were going to invest in Philly for a while, and talk to 1 million people on the phone, got pictures, videos. Then we went there and said, holy crap, we don't want anything to do. Yeah, we don't want anything to do. Then we actually toured properties, toured the neighborhoods, went to eat in the restaurants, and was like, I'm not gonna put $1 into this area.
Wow. That's interesting.
After 4 months of talking with people, meeting with you one time, lenders and all this stuff, lined it all up, ready to go buy houses in Philly, got there and said, let's get the hell out of here.
Wow. Yeah. So that's interesting too. So like the fact is that I'd like to encourage others to share some thoughts like Garrett's doing, because he's stepping out, and I know he's comfortable doing this. He's comfortable being uncomfortable because of who he is and how he operates. And I appreciate that about you, Garrett. I would say,
Garrett, what is the reason you think that Philly is not good? I was asking Garrett that what is the reason you think that Philly is not good?
For us, the rehabs were 3 times the size of what we were told and expected. So you're going to 1900 houses that were made with no materials from today. So it's massive. The houses were like 40 grand with ARVs of 180. So salivating at the mouth. It was $140,000 reno.
Yeah.
So yeah, I don't recommend $140,000 renos remotely.
Right. And actually, if I could pop in here for a second. So I think what's interesting, and it's cool to listen and also process it. I hope you guys are really listening to the conversation so far. There's all different perspectives and questions and curiosities. And the fact is that, interestingly enough, we each have our own definition of what like a comfortable deal looks like, what a risky deal looks like, what success looks like, et cetera. And I think that if I can say one thing that I'm noticing, perspective is for sure, perception is reality, as they say, right? Perspective is really the definition. So like Garrett makes a lot of good points as far as the outdatedness. And I would say also the part that you might not be clear on, and it's not your fault, Garrett, but you're probably not saying this people that send you the deals, i.e. probably wholesalers or maybe not so good real estate agents, with all due respect, like they don't know what they're talking about. If they're not telling you that, if they're saying the house needs $20,000 worth of work, it needs like 80,000. Is that kind of what you're saying? Probably.
That's exactly what it was.
They're leaving out like a lot of details, right?
Yeah,
so,
40, 50,000. And then we're looking at it like, all right, well, that's a $20,000 roof.
Right. Yeah. So
there's no walls inside. So,
so you layer in like, and one observation I make is like, people have to understand, going back to that supply chain example of like how the flow of kind of information goes and real estate stuff goes. You're dealing with a not so good wholesale company, we'll say. I don't know who that is, but it doesn't matter who it is. They provided information that wasn't accurate and then wasted a lot of Garrett and his partner's time, it sounds like. And that created a perception, which is probably accurate in terms of the general market, because the fact is, like, if you're talking about single family, now here's the thing, there's an overall market. This is really challenging to talk about, right? Because it's like this high level market concept, and then you have like sub-markets in terms of location, but then you have like different verticals within those. So not to break it down too much, but you have like single family flips, single family holds might even be looked at a little bit differently. Multifamily flips, multifamily holds, large commercial, retail, mixed use, all different kinds of stuff. So one of the next things coincidentally I want to show actually is a website that you can all use. I'm going to talk about it a little bit as I'm showing it. And then I want you guys, if you have a thing in your mind and you're like, man, I wish Doug could just shut the hell up so I could talk, just do me a favor and pop it into a chat. Don't forget it. Just write it down, do whatever you got to do. But I want to share this because it's so relevant to what we're talking about. Let me go back here. If this is the right one, hopefully the right screen. Okay. So CBRE, I haven't done any business with them, but they, I believe, are a large commercial, generally commercial real estate firm. As far as how they work, don't ask me because I've never done business, but they have a really cool research section here called U.S. Real Estate Market Outlook 2021. They break it down by different sectors. So like office, for example, versus multifamily, hotels, retail, capital markets, industrial logistics. Like this is cool stuff. So if I click on, for example, multifamily, because there's some multifamily investors here. And again, I haven't verified the information, but it's on a website of a pretty large company. So I'm assuming that they've done their research and they have footnotes about all this information. So they're saying that multifamily investment is to rebound with 33% growth in 2021. Now you see that it took a dip this year for probably obvious reasons, and now it's going to bounce back up. Now the way they define multifamily also could be different than how you're defining multifamily. Like technically a multifamily is anything more than 2 units, but they could be talking about 200 units, right? It's not clear. So you have to do your research on that. You could research this more, look on the website. There's different people that they're head economists and such. The fact of the matter is it's like, I want to be clear that, Garrett, your approach and my approach might be different. And then someone else's approach might be different. So like, I know of, for example, a company that has a syndication that only invests in Philadelphia, and that basically, I'm going to come off the thing here, only invest in Philadelphia, but they only invest in like 50 plus units. And they're like swearing by that market as being a great, you know, thing for them, a great market in terms of like returns and the economies and stuff like that. So I think we have to define, and hence my comment before about everyone kind of do me a favor. We could talk about it, but we got to put it somewhere. If you don't know this about yourself, you got to create what some people call a buy box, right? Or like your business plan effectively. This is what I'm going to buy. And this is basically why I'm buying it. I want to know the numbers. I need to understand the dynamics. And if you define that, if you shared your buy box with everybody, if hypothetically we all did that, I can be pretty sure that there might be a couple that are almost the same, but generally speaking, they're all going to be a little bit different, right? Because everybody has different perspectives and interests and goals and objectives and such. So what I'm getting at is that I think if we define, like what I'm talking about mainly is what I deal with every day, which is single family, residential single family flips. And residential meaning that it's in a community, it's in a development or a small subdivision, or maybe, somewhere not too much rural stuff, but focusing on flips. So adding value to the property through renovating and selling it. If you go into like holds, as far as like some buy and hold opportunities, I know Garrett said he's doing both flips and holds, but I can tell you, and Garrett could probably tell you himself, that I'm pretty sure his strategy would be a little bit different about the exit being a hold versus a flip. He may not do as high-end renovations to get maybe he will, depending on his tenant and what they're paying every month. He may put in granite countertops. He may put in some soft close cabinets and stuff like that. But if it's a lower-end market and the tenant's paying $600 a month, he's probably not going to do those things. He'll probably just put in a nice, Formica top or whatever. It just, those little things can make a difference. Now, everyone has, again, different perspectives. So some people want to invest for the long term. So they'll go high-end renovation no matter what. They're like, I'm going to keep this property forever. I'm going to pass it down to my kids. I'm going to renovate the heck out of it. I'm going to consider it an investment for my future. Other people like, I want to make money this year and just make as much as I can. So I'm going to spend as little as possible on capital improvements. I'm going to focus on just generating cash flow and having as much of a margin as I can create. Maybe I'll go a little less than market rent, but I'll get a good rent and I'll have less expense now. So again, there's these perspectives of how we go about our business that make us different and unique. But if you aggregate it up as a general sense, that's kind of what I was starting with, is like, there's a general pressure in terms of buyers having to find deals and make deals is becoming way more difficult as a general consensus than it was a year or two ago, right? Like it's always gotten worse and challenging each year because of the macroeconomics, not the micro or the nano, if you want to call it that. I guess maybe go super specific. I hope that makes sense. It's a little bit abstract, but does that make a little more sense as to why we're having some difference of opinions and different perspectives? Is that kind of adding up for everybody?
Yeah. And Doug, I'll reiterate on your buy box, speed wins deals. So you got to have a buy box because you need to be able to evaluate deals quickly. We lost a deal 2 days ago because we didn't know the street. We would have paid more than the guy who bought it. We would have paid we were going to go in at 37. The bank took it at 35 because we were 1 day behind on being sure. And once we were sure, we called up, put it in, called, hey, it's sold for 35. It was horrible.
That sucks, man. Yeah, but you know what? Learn something from it, it sounds like. And we all every day. You learn. I'm always learning stuff, and our team is the same thing. Like you have to just observe and understand what's happening and figure out what to do about it next. Try to understand how to make it better.
Well, that's it. Deals are a little more scarce these days. So any good deal is going to go fast. So you better do your due diligence quickly and get it out there quickly, because that's happened, I think, to all of us, myself included, where you sit there, especially in the beginning when I first started out for a lot of you guys, you get nervous and you do a lot of extra, due diligence and blah, blah, blah. And then you're finally like, all right, I'm ready to make an offer. No, that's gone. So we all learned that the hard way. But yeah, Gary, you're exactly 100% correct.
Exactly. So yeah, I mean, I think what it comes down to is also we have to all be mindful that the chance of someone stretching the reality of the truth, like for example, for a wholesaler to tell you that the repairs are X and they're actually X plus 10,000, 20,000, 50,000, it's more likely to happen in a market like we're in right now, from what I can tell, because there's a scarcity of good deals and information is going to be skewed more than it would have been otherwise, because it has to be, frankly, not saying that's a good thing to do. It's unethical and incorrect to do that. Essentially lying to people if you know better, right? If you don't know better, it's one thing. You kind of don't realize you're making a mistake. But if you actually know there's costs that are beyond what you're putting out there, mind you, everything's estimates. Like that goes, it's not in our business where everything has disclosures and stuff like that. But I'm pretty sure there's most people, I'll say, to give them the benefit of the doubt, probably don't mean to make mistakes when they put out numbers that are off. But there's also a group of people that frankly purposely make mistakes for the intentions of screwing up somebody else, which is so not good.
Yep.
And I would never recommend that to do that for anybody just to get a deal. I mean, there's some people that look at wholesale real estate, just to be frank with everybody, as being like a retirement plan, right? But the retirement plan for them is like retire for the year, not retire forever. And I don't mean to be stereotypical, but there's people that will literally try to make 30 to 50K on a wholesale deal from doing one deal, and the deal doesn't even support a $5,000 wholesale fee based upon the numbers. But they'll still try to stretch it out and make it a $50,000 fee somehow. And that's where those people just get a bad rap, and we're not associating with those folks. We weed them out very quickly when we kind of aggregate deals and bring things together in our network of wholesale deals. So I would say, anyway, just be mindful that the information that people are sharing with you, and I can say that our company does our best. I can't say we're perfect, but we do make mistakes, of course. But if you see something that looks off, definitely bring it up. We're happy to have a conversation about it and look into it. There are some companies that have the position like, this is what it is, take it or leave it. And if you don't like it, move on. That's not our approach. We do have a certain process to follow at JDL if we're wholesaling a deal, where you have to submit a deposit to secure a deal. You have to tie up with a contract, of course, all that kind of stuff. But that's like after you've already decided that this thing makes sense for you. We require you get to the property, you do a walkthrough, you bring your contractor, you see what it is, all that stuff. And then we go into contracting because we don't want to have you be upset or we be upset about wasting time and thinking that it's a deal. It's not really a deal. But there's some wholesalers that don't have any process. They're literally just spitting out information about something that they don't even have a contract on it at all. They have no ability to get a contract. They're not in contract. They don't even know who the seller actually is. They just hope that someone's going to say yes so they can figure everything out. And that's not a wholesaler that you want to be working with. And so fundamentally, those folks, unfortunately, and I'm trying to watch out for the group here, and I hope you share this information with other people that can benefit from it. Those people are going to eventually be weeded out, right, by everybody, because it's going to be found that they're not reliable and they're not certain about anything, and they're just kind of putting out nonsense. You can't, as a buyer, be participating with that process of those kind of folks that are going to be bringing you nonsense. So anyway, that's just something that's more likely to happen. That's a sort of a Doug projection for 2021. There's going to be a lot of nonsense wholesale deals that don't make any sense. People are trying to spit it out there just to get a quick fee, and just be mindful and be watchful of that. Let's go back to my screen share for a second here. And we were looking at this multifamily analysis. I'm not going to go through too much on that. You guys could do your research again. Check out cbre.us. I get no benefit, by the way, financial or otherwise, for sharing these. I just want to help you guys out. 2021 construction forecast. Let's talk about this for a second. So with the construction side of things, this is a company, ENR, I'm not that familiar, Engineering News Record, but I came across this article and I thought it was pretty relevant to what we're talking about. So single family starts rising, says Dodge, not Dodge the car maker, but Dodge, a company that that does statistical analysis on construction, and they're a
big company.
What's that?
They're a big company.
Big company, right? Yeah. So they did some stuff here to say that total residential starts are expected to rise 5% in 2021. It's very much in alignment. Single family rising will rise 7% in 2021. So total residential is 5, single family is 7, and 254 billion. The numbers don't matter that much, but there's still a rise and highest since 2007. There's a lot of different details here, mortgage rates and such. You could do some more research. There's hotel comments. Some of you may not have anything to do with hotels or retail or industrial. I don't really do anything with that either. But just get your information, do some research, and take it, piecemeal to see what actually makes sense. Another thing I want to share is on Bigger Pockets, another great resource for you guys to check out. Again, it's a free website. There's a paid version, I think, that they offer, but it's generally free with a lot of great content and information and networking. Affordability is improving nationally despite strong nominal price appreciation, according to First American Real Price House Index. Let's see. So let's see, a leading provider of title insurance, First American, that is. And by the way, we have a title insurance company. It's not, unfortunately, we're fortunate, I don't know, First American is not the underwriter, but I know who they are, though. They're definitely a reputable multi-billion-dollar company. And so they're talking about affordability improved in July as a two. So, this to me, affordability can be, the way I perceive it, is the housing price, but also the ability for someone to get a mortgage at a low enough rate. So it kind of says here, household income and mortgage rates swung in favor of increased affordability, outpacing the rise in nominal house price appreciation. The average 30-year fix fell by 0.7 percentage points, and household income increased by 5.5% compared with 2019. I want to remind everybody, and this is not a political statement, that before COVID, the housing market and the whole world, the whole real estate and otherwise business world, I would say, was doing very well. We've seen a lot of shifts, obviously, for good reason, in terms of the market being uncertain, the real estate market to some extent in the beginning of COVID, but now sort of stabilizing, I think. And getting to be certain again in terms of rising again. But I would say that don't forget the underpinnings of where the economics are of the world outside of real estate in terms of financial markets and just the general economy pre-COVID. COVID was an outside influence. It was a one-time, hopefully, event or something like, very infrequent as far as pandemic. It's affecting the entire world. So it's a universal impact. It's not an isolated incident that's affecting one market, one region so much. It could be affecting certain places more, of course, like we see the heat maps and stuff, but that's just one thing that's an outside influence affecting what we're participating in. So just bear in mind all those facts and consider, what does that mean to you? It might mean something different, right? Like, it doesn't mean that you should or shouldn't do something based on my opinion. You have to decide, how do you feel about your comfort level or risk, what we've been talking about all night. So that's just some additional articles to share. I want to open up again for any conversation and questions. I haven't heard from too many folks here besides Garrett and I think one other person. So if you guys could participate, that'd be great. I want to give you the opportunity to ask questions and share feedback as well.
I just have a quick question too. If anybody else wants to jump in, that's fine. What are your thoughts about, like, as far as, going into next year, about worrying about like the rising costs of construction? I know there's been a big jack up in lumber lately. We felt that hit.
Yep.
So just want to know, and anyone in the group wants to chime in on that, what they think about, the rising cost of materials and stuff, and construction is going to be next year. If that's going to be something we need to worry about.
Yeah, I mean, I'll defer to anyone in the group first, and I don't know why this thing got a little fuzzy there, but anyone want to comment on that? Anyone is in construction space or dealing with contractors on a regular basis? I know we do.
I'll say our bigger concern is supply over cost.
Okay.
Getting the materials.
Building materials.
Yeah, building materials, roofing shingles, weird stuff. Windows. Lumber's the lumber, that'll eventually fix itself if you buy a house cheap enough. But yeah, like weird things like bricks.
You're talking about like being back ordered, like just taking a long time to get?
I mean, who even knows? I don't think anyone knows what you're talking about at all. But they're just saying, yeah, we don't have windows. Like, well, where are they?
Wow.
So that's some of the pushback we're getting, is there's just actually no supply versus what it costs. So I think it's artificially inflated cost, because there's just, I don't know if it's fake no supply or real no supply. I don't know.
Right. Yeah. Well, I think, at the end of the day, it's economics. Like you said, however the supply is being impacted, if there's the same or greater demand, it's going to increase the price. If the supply is decreasing, real or not, I would say, we've seen direct issues with lumber. We have a couple of attic level projects in North Jersey, and the lumber costs, on one project, I think we're spending like almost $6,000 more than we anticipated. It was only supposed to be about $15,000, I think. So it's a pretty significant increase. It's just a lot of shifts that are happening to make our lives a little more difficult than even they already were to begin with. But you got to roll with the punches, right? So I think that if you're looking at what Rich said as far as planning for 2021, no pun intended, but you got to plan a little more, plan a little better, and anticipate those problems as best as you can. So maybe put in a little more of a surplus or a contingency into your renovation budget. Don't just make it so streamlined where, it's the best case scenario. You got to add a little fluff in there to make sure you're protected. So if you hit a roadblock or you hit a cost increase or a delay, you're not going to be, knocked out of that project. That's what I would suggest.
Yeah, and I mean, contingency is very important, because I don't think there's ever been a construction project in the history of the planet that's went 100% perfectly. So you've always got to make sure, anybody who's new here, make sure you always put in that contingency, because there's always stuff that's going to pop up. Hopefully it's nothing huge, but and if you've got that contingency, it hopefully will cover that, and then you're not taking it out of your profit. So.
Yep, absolutely. How about, who else do we have here? I appreciate everyone hanging out. It looks like we got a pretty sticky group, which is great, meaning that you guys are staying here and you're talking with us and have listened to our conversation. How about, I saw Paul put a comment in there. Paul, you have any feedback or questions? I'm looking at the list of attendees here.
Yeah, Doug, I just had a question about during the COVID, high level of COVID between March and I'm going to say May or June. For those of you doing rehab, how challenging was it to, to handle the rehab situation that time, since almost everything was locked down? And also, did you guys have any forgiveness with the lenders, for those of you lending money to the project?
I could comment on that a little bit, and then I'm happy to have others jump in. So we bought a handful of projects probably I think we bought like 2 or 3 right before COVID, which is bad timing, of course, in terms of not anticipating that. We had no idea, of course, nobody did. We had some projects that we actually bought in the thick of COVID. So from like April, we had maybe 1 or 2, and then like in May, we had a handful as well. So, but those that we bought in April and May, frankly, some of them were supposed to close in March, but it's just that the lenders and also the dynamics of the deal were in question, you know, like whether it made sense or not to even buy them. We were sometimes negotiating ourselves out of deals because of the massive uncertainty at that time, not knowing what was going to happen next and dealing with it day by day. Probably how some of us might feel if you're looking at the news about the presidential election and what's going to actually happen, who's going to be inaugurated and stuff like that. It's a similar feeling in a way because you don't know what to expect next with all this information being spewed out all different directions. So anyway, we felt pressured in terms of, you know, sellers pushing us a little bit, getting sort of time of the essence a couple times, having to close like under those pretenses, and then also dealing with the lenders and having to actually have the lenders help us in the case of what we were buying to kind of help alleviate some of the pressure by just letting people know that they're still in the deal, they're still ready to do the deal, but they just need a little more time to line up things on their side. And we had to be a little creative, but I think since everyone was kind of facing it, like it was almost understood. I remember, I can't remember which one exactly, but there was a deal where there was a lot of email exchange about the timing and just the fact that we would set a closing date as soon as possible. We didn't know when. We definitely wanted to still buy it. And in that circumstance, the seller was reasonable with us and didn't have any pushback. They understood for obvious reasons. As far as construction is concerned, if we go into construction for a second, I mean, there was definitely some real challenges from, like you said, March to like June for sure. And even to this day, in some cases now, I think with the New Jersey being sort of locked down again, is what I'm hearing, right? Is that the certain municipalities, in fact, most I think are not operating at full capacity or any capacity in some cases. And so we had that problem with respect to permits and inspections, mostly in the beginning, like May through, like I said, June, kind of opened back up mid-June into like the rest of the summer. But that really set us back in some projects that needed significant work to be done because we couldn't get permits, you know, approved and things. We couldn't get inspections scheduled. Building inspectors were not available. And don't get me started on building inspectors because they already only work most cases like part-time or less than part-time. So I don't understand how that's possible with the amount of demand of renovations and stuff happening in most of these places. But that's a whole nother conversation. You know, they work like 3 hours a day, 3 days a week or something. It's just nuts. So, and then they set windows, and Rich knows it's like the utility companies where they say 4-hour windows and they show up for 20 minutes and they're gone. And they usually do it at the end of the 4-hour window. So it's like crazy. But anyway, the COVID stuff definitely affected the municipal locations. Contractors, you know, I had at least one project where contractors could not work because one of the guys in the crew got COVID. So I was told. I didn't get his confirmation. I'm not asking for his test to see if he's really COVID, you know, has COVID or not, because I want to be mindful of being respectful and stuff. But we had to find a solution. So we had to get another crew going that wasn't sick. I've had other cases where, you know, guys just can't work. They don't feel comfortable working. They don't want to be in the outside world. I've had other, you know, all different, anything you can imagine. We've had that happen probably in the past 6 to 12 months or 6 to 9 months of COVID. But generally speaking, what you're saying there, Paul, about the delays on the township level with inspections and stuff like that, and also the lenders being very cautious. At one point, I know there was no lending happening from a couple of the lenders that were lending like very openly before COVID. Most of the LTCs were reduced, loan to cost. So a lot of times we get 90% loan to cost. When COVID was in the thick of it, we were getting like 70 to 75%. And if you're in the midst of buying a property, just to put it in perspective, if you're planning on bringing, let's say, $50,000 roughly or $60,000 to closing, and now all of a sudden you got to bring $150,000 or let's say $100,000 even, whatever it is, you have a little bit of an issue because you got to figure out either moving your own money around or bringing in some additional private capital, whatever you got to figure out. So there were certain circumstances that had to be dealt with like that as well. The folks that we work with that were regularly, you know, relationships that we would go to that would joint venture with us, some of those folks, you know, were actually even more cautious than the apartment lenders because they want to be careful with the whole market. So it was challenging for us to get deals funded the way that we typically do, which is usually a combination of hard money with private money. And so, you know, it still is a very challenging time overall, you know, at a higher level, but in the thick of it, it was really, really difficult. And so we thank God got out of it in terms of getting through that. I commend anyone who had projects. Sounds like Garrett had some stuff going on. A lot of other folks had things going on. And like Rich, I think, said to me the other day, kudos to Rich. He's like, look, if we can get through 2020 and make it out okay, I think 2020 is gonna be pretty good. So that's how we're looking at it, you know, overall.
Yeah, it was a little tough there for a while, but you know, I'll tell you, in the last couple of months, you know, things are getting back into gear. we're gearing up at JDL to have a big year next year. So we're putting a lot of new systems, new people in place to really get that done. So, hopefully there'll be no other pandemics next year, and we're gonna have a great year. So yeah, if you survive this, and you guys are all here, so it looks like you all did. I think we can get through anything, to be honest with you.
Absolutely. There was a question, I think, Paul, you had also around the forgiveness or deferment, probably is what you mostly
Yes,
were.
was there any forgiveness from the lenders for the lateness of the payments?
We had that conversation with a couple of them, but it was to no avail. As I said, like, it was not successful. And it was more or less, keep in mind that when we start the project, we have capital set aside for the expected duration of the project, but it wasn't so much about not having the money available. It was just more or less in principle, the fact that there was so much happening in the world and so much constraints. We didn't want to be like, hey, we need that too kind of thing. But it was more or less, we figured we asked and we were, quickly denied, because it wasn't like the hard money lending space is not governed by the same laws and stuff as the mortgage, residential mortgage space. So it's as far as I know, it's unregulated, right? It's a business loan agreement, essentially secured with a mortgage. But it's not a typical residential mortgage. In most cases, it's like a different structure. So I don't know, because I don't lend hard money, but it might be different than what I'm explaining. So take that with a grain of salt. But I'll tell you what I've seen has been predominantly the way I just described it. And so therefore there's no TRID, there's no any sort of other mortgage type, requirements, and the CDs are not required. It's mostly HUDs and purchasing with the hard money and stuff. So all that, there's like, they can kind of do whatever they feel like doing, whatever they want to do. They're not governed by whatever I shouldn't say it like that, but you know what I mean? Like, in terms of comparing it to a residential mortgage, it's not nearly as strict with what they have to comply with. There's no government programs that would satisfy, under the same pretenses as what a hard money loan or a lender would have to do. So knowing all that, it was kind of like it wasn't possible to get any sort of like deferment. But I will say there's been a handful of hard money lenders that have been cognizant of the fact that things take longer, and they've been willing to grant extensions in some cases where we had to get an extension on a loan. And that's something that, it happens, it's a reality that your project doesn't always happen as quick as you expect it to, and you have to get extensions at times. So that has happened. It's prevalent, I would say. There's a lot of people I know that had to do extensions besides just our company in certain circumstances. So, but yeah, that's like a little bit of perspective on what we've experienced. Anyone else want to share any perspective on that comment? And then also any other questions you guys might have? We have a little more time here.
Yeah, I got our refi companies shut down, so it cost us, just more money with our private lender.
LLC refis, yeah, like commercial refis, like
that came to a halt.
Yep.
Yeah, which wasn't cool, but
yep.
Because we're paying 12-13% on the private money side, waiting to refi out, and you got a couple projects out there. That's a chunk of change more than anticipated.
Is it generally refi for LLC or just generally refi, like refi as a whole?
LLC is what I've seen, but I don't know what Garrett sees.
I've never done a refi that wasn't an LLC, so I don't know.
Refinances on mortgages, from what I hear from people I know in the mortgage space, are like hot, as far as like a tremendous amount of refinances, because your rates are so low. And even since like just a couple of years ago, in most cases, a lot of people, they're refinancing if they can. So I think that the refinance availability of refinances on the traditional residential side, mortgage side is not as affected. It may be affected, I'm sure it is, but not the way that what Garrett's talking about is really when you have an LLC based mortgage for refinancing. And that kind of structure was definitely, they call it a secondary market, I think, in the financial space that was no longer available. So because it just got eaten up by the COVID, so whatever, I don't have the details on it, but I have people that know that stuff, but I don't know it off the top of my head.
All right, who's doing these loans nowadays?
Say that again.
Who's doing these loans now?
Who's doing the loans in terms of the refinance loans? On the
refinance and investor loans for some properties, because I'm having some issues now. I'm in contract with a couple of properties. I'm having some issues getting the money.
All right. Well, so first off, how you doing, Terry? I'm not sure that we met before, but I'll say hello. My name's Doug. And as far as great question. So as far as who's doing the actual refinances on the LLC based, I don't have like a go-to company. In fact, most of the ones I know are not doing that right now. There's a couple that I can think of that might be interested, but nothing that's like an official program that's available. So unless someone else has one they want to share, be you know.
Are you doing for refis or for buying the property?
Buying.
Gary? Oh, buying.
There's plenty of them out there.
So like yeah, I'm buying now, but I'm having some issues with a lot of banks. Their points are exceptionally higher. There's some issues, I guess, because of COVID, and it's not a primary residence. So I have a couple of other properties. So I have some debt ratio issues.
I was gonna say you know, so I had a conversation. I appreciate that question, man. Just to clarify a little bit, that's good. I have some people that are in our program as well that I'm talking with that are clients of ours that basically asked me a very similar question, no BS today, about hard money and kind of how they underwrite hard money. And I'm not going to give you guys a whole lesson on it because it's not necessary. But for your question, if let's say and I'm not saying this is the case, Terry, it's nothing to you. I don't know you at all. Really, right now, off the top of my head, I don't recognize your name, but I don't know your situation, even if I knew you financially. If your job situation changed at all, if I'm talking about anybody, you're not just you, your job situation, your credit score, your income, all that kind of stuff. If your debt got higher, if your income went down, which is likely for everybody in some way, shape, or form, for those dynamics to have happened in some way or shape or form over the past 9 months or so, then basically, even though hard money is willing to lend based on the asset and its value, its future value, or in some cases they look at as is as well, they're still going to look at increasing your rates, increasing your origination. You become riskier as a borrower to a hard money lender if you have impact in your personal side of things. Even if you did nothing different personally, like you didn't have a bad project, you still did well, your project's still moving along, you naturally as an individual, as a guarantor, because pretty much hard money loan I know of is personally guaranteed. There is such a thing as true asset-based lending, but those LTVs are very low, meaning that you're not going to get a lot of leverage. You're asking for you to put a lot of skin in the game, as they say. And you're typically talking about different kinds of assets, not these high value add, having to renovate, a third or more of the property to get the value. These are typically, very simple little renovations that are not going to be any issue. So anyway, all that being said, you just got to consider that there's all different risk profiles that people have, and lenders look at you differently depending on how their risk profile kind of works as well, and how they look at your situation. So we can make a couple recommendations. I'd like to do that in private if that's okay. If you want to message us, you can send a message to Rich at JDL Ventures or myself, Doug at JDL Ventures. I can make some personal introductions for you guys. For the people that we actually use ourselves as far as hard money lenders that we borrow from, I'd like to introduce you to the contacts that we have there that can help you and see if it makes sense. And typically we don't actually make anything on that, just in case you're wondering. Some of you that are seasoned, of course you want to do that because he's going to get a fee or something like that. And most of the time we don't, honestly. And if we ever do, we tell you about it. We don't try to hide anything, unlike some companies that are just very shady with that. Origination shouldn't be more than a few points. If it's like 5 or 6 points, you got issues there. If it's even 3 points, you got to start wondering what's going on, who's making money.
Yeah.
Average origination is between 1.5 to 2.5 points. The average interest rate for an experienced borrower that I've seen is right now between, let's say, 9 and 12%. In some cases, you can get sub 9, and there's people that would offer that. But I'm just telling you as a general sense, this is not any sort of offering. I'm not talking about borrowing money from anybody. I'm simply just telling the audience here about what's available in the marketplace of hard money, what I've seen. And so essentially 9 to 12% is still what you're seeing in most cases. And that's depending upon the property, you're going to get a higher rate because it's based on risk. Your higher risk is going to have a higher rate. Your higher risk of the property, the higher risk of you individually or your company is going to have a higher rate. And also the experience, if you have less experience, you have a higher rate, which is almost counterintuitive, but they want to make sure they're making money and not going to not going to walk out of the wood without making money. And then you're not making money either. I guess it's almost ridiculous to say it like that, but that's really what would happen if you failed in a project. The hard money lender would make a bunch more money than if you actually succeeded at it, right? It's like almost backwards. You would think they would offer lower rates for people that are not as experienced to kind of help you through the project, but it's not usually the case. With that being said, I see a hand raised, I think. I'm not sure if that's right or not, but my father, Mr. Beck, there is raising his hand digitally. So you want to say something? You want to jump in?
I just want to add about 2 or 3 minutes of information here. Can you hear me all right?
We can hear you, yeah.
All right. I'm a young man at the age of 80. All right. I bought my first house 51 years ago. I paid $29,000 for a 4-bedroom, 2-story colonial, 1,400 square feet with a half-acre lot. Okay. That house, as I understand, is selling for now around $300,000. About 38 years ago, I bought the house I'm living in now here in Branchburg. I paid $189,000 for it, and it's well worth, well, without the improvements that I made to it, it's worth over $600,000. The world you guys are in is really, really good. The smart thing to do, you got to be smart though, and you got to get good deals. You don't buy high and sell low. All right, you buy low, sell high.
Yep.
And you need a lot of help. There's a lot of ways to do things more efficiently than some of the guys that we've heard over the years, how they would go around in this town of New Brunswick, New Jersey, and put Post-it notes on doors. I want to buy your house, kind of deal. Call me. You know, Doug has developed many simplified, more efficient processes. He didn't tell you that he has a double major out of college, computer systems and entrepreneurial studies. And he didn't tell you that when he was working for J&J, he was negotiating deals. And he came to me one day and says, I saved J&J $1 million today on a $10 million deal, and my commission was nada, zilch. I cannot handle this any longer. And I said, great.
Yeah.
You want to do something else? Or go for it. So for 6 years, he's been in this real estate business, and he's doing quite well. I strongly encourage any of you who are floundering about, not sure what you're doing, contact him, talk to him. He has several little programs to help you. He loves to joint venture. You find a deal, bring it to him, you can put it together, bingo. And you won't make the mistake of getting a deal and losing money on a deal.
Right.
Last but not least is
my biggest fan, right?
I know.
The current world we're in. The people are moving from New Jersey out of the state, and they're very smart to do that. Okay, I won't say any more than that. Whatever. But and people in New York are moving from New York to New Jersey to get away from the crazy stuff in the city, right, or whatever. The whole virus thing, I believe, is coming to a quick end here. I think Garrett's right with supply, getting materials and getting everything made that you need for your construction is a problem. It will continue to be a problem. But guess what? These programs that the federal government put out last year, or I'm sorry, this year for a virus, the PPP, Payroll Protection Plan, and the EIDL. What you got? What I didn't tell you before is that I'm also the owner of a hair salon, small business, 26 years. The money that the government has provided and will provide in this next bill they're going to put out is helping people stay together. Yeah, 30% of the business in New Jersey you have closed up, but guess what? They're going to be coming back, and things are going to get better. So in the world you're in, the population constantly increases. More houses are being built. People are moving. Be smart. Stay with it, and you should be successful. That's all I got.
Yeah, appreciate it.
Thank you.
Thank you.
Thank you, Mr. Beck.
Absolutely, thank you. I would say that, notwithstanding the fact that he's my father, he makes a lot of really good points, and it's not about us or me. It's really about the concepts of now's a good time, I would say. I mean, obviously, I'm proud to offer what we offer. We can talk about that with anyone who's interested, and individually, you can reach out to anybody who's here. Email addresses, if those either on the JDL team could just put in your email addresses and maybe talk about your main focus and what you do for JDL, that'd be helpful for anyone who wants to check out in the chat box. They can see that and how to contact you. But as far as the dynamics of preparation and the concept of preparation, I think, you should really, if we could, we'd already be prepared. Everybody at whatever level you're not prepared yet for, you want to think about preparation for next year. It's a logical time for not just real estate or business, but actually life, to always be looking ahead and think. I mean, you want to stay in the moment, of course, don't get me wrong, but you want to plan for the future. So how can you do that? Well, we're at the end of the year, relatively speaking, right? It's the beginning of December, but it's basically the end of the year. That should be somewhat exciting for you, even if it was a tough year. I mean, if it was a tough year, probably is even more exciting, actually, because you're trying to get through the rest of the year. But it's not like January 1st is going to come and all of a sudden the rest of your life is going to be fixed without you doing anything about it. You got to do something about it. So what you can do is participate in events like this. Other people have events like this. A lot of great guys out there and gals that run events and do different programs and different things. but also I would recommend taking action. That's the most important thing. So fundamentally, you can attend a million of events like this and literally do nothing, or you could do something and even attend these events, but not take the guidance or suggestions or the resources available to you. And that's not a good thing either. So if I can ask that everyone at least have a conversation with us about how we can direct you in the right place. I mean, that is no obligation. There's no sales pitch. It's just a matter of helping you if we can. Our company has a lot of different resources to assist you, whether that be a structured program where we have a specific cadence. We meet at a certain time, we meet a certain day, every single week, every single month, whatever it is. We have some clients like that. We have other folks that just buy wholesale deals from JDL. We have some other folks that want to, partner with us on deals and Douglas Share Development and work with our company that way and do business together. We have wholesalers that bring us opportunities where we bring that to our audience at JDL and we help them wholesale their deal. We co-wholesale or joint venture wholesale. We have the title company, which is on my shirt here, Investors First Title Agency, which helps folks that are buying property get their title insurance and their settlement taken care of. I'm partners with a guy who's been in that industry for decades, literally, and done well over 10,000 closings successfully, mostly a lot of investor transactions. And we have other businesses, brokerage business and other things that we do that frankly could serve you well. And there's no right or wrong way for one person. So kind of like the dynamic I mentioned before, but everyone have their own risk profiles, their own perception of what it means to have a good deal or a market that's good or not good. Your story is going to be layered into how we can help best. And whenever we have that conversation, and if we can't help you, we'll tell you that too. But like, for example, Terry asked a question here about hard money. I can give him 3 introductions and he could probably get his deals funded by 2 weeks from now if he's actually a qualified borrower, which it sounds like he is. And that's with a few conversations to have and maybe some paperwork. So those kind of connections can be made with obviously your guys' help of actually asking for that help and seeing where we can synergize. There's some really cool stuff we're working on that's not ready yet, but I'll just tell you that next year for us is going to be an awesome year. I'm confident of that because we have a lot of foundational stuff handled. We have a full-time marketing team now that does a lot of things for us. We have an operations staff and a sales team that helps really with the wholesale side, folks like Dana and Rich, and a guy named Carl and Danny, and also Joe to some extent this year. He's talking more on the mentorship and whatnot, but a lot of folks on the team that are really great people that really truly want to help you and not just sell you something. Like, unfortunately, a lot of programs and people out there just sell, and that's all they do. We come from a place of integrity. We want to be doing the right thing at all times, even when nobody's looking. And we want to help you guys get to the next level. So this is the time, literally, like it's not cliche. It's like literally this time of year, December, before the new year is the time to start prepping and planning. So we've seen that happen year over year, and it's going on our 7th year in business now, coming in January, believe it or not. So 7 years in, and honestly, a lot of ups and downs in different ways in different parts of the business. But frankly, we're coming in stronger than we've ever been for 2021. And I'm excited about that and proud of that. But I'd like you guys to have a conversation with us. So again, reach out to whoever might have put a comment in there. If you guys haven't yet from the JDL side, put a comment, please do so, and let folks know how to reach you and what email address and phone number they can reach you at. With that being said, I thank everybody for your time. I'm sorry if we didn't have a chance to go through your question. I see Nathan has a hand up. Maybe we can, since he had that up before, I think I saw a blue thing there. What question do you have there, Nathan?
Yeah, sure. I just wanted to give you a thanks so much. I've been in this business of wholesaling and buying and hold in North Jersey for the last 5.5 years. And last couple of months, I've been starting doing a lot of JVs with other wholesalers. And I've came across your company. I've had the opportunity to talk a couple of times with Carol. And I just wanted to give you a big thumbs up. You're doing a great job. I see you're very professional and your company does a lot of good stuff. So I appreciate you giving a lot of good value to the community. And I also just wanted to check with you how you go. Your father mentioned that we should pick you up on JVs. I'm doing a lot of JVs recently. I have very strong buyers in Hudson County, Union County, Essex County. And I just wanted to check how you work with that. And then I do have from time to time other wholesalers bring me deals that they cannot sell, but I don't have the reach exactly to how to get them the right buyers. And maybe with working with you or your team, there's a chance for us to help those wholesalers get them to the right buyer. So I just wanted to know how to go about it and take it to the next level.
Appreciate it. So first off, thanks, man. I'm humbled by your comments and flattered. Appreciate that. And I'm proud of the team. It's really a product of obviously some of my focus and time, my vision, but also the team's execution. So I'm happy to hear that you're getting a pretty good experience so far, and I'm looking forward to hopefully helping you and the other folks on this meeting and other folks that hear the message, even in bigger ways in the future. So as far as joint ventures are concerned, let's bucket that out for a second. So there's joint venture wholesaling, which what Nathan is talking about, just to kind of set the parameters here, is when someone has either a deal or they have a buyer or something else to offer a value. If you're focusing on wholesaling, typically it's either the deal or the buyer investor. And so essentially, a lot of cases, what we do at JDL is we have a person that, like Nathan, for example, that brings us an opportunity that he's already got under contract. And then we then take that opportunity, enter into a contract with him to buy it under the expectation that we're going to bring an end buyer, basically an investor end buyer. And so we work on what's called a joint venture basis in that capacity. Sometimes the opposite is true, although the first thing I just mentioned just now is more common than not with our joint ventures. So typically we're bringing an investor. Sometimes an investor is actually my company, Douglas J Development. Sometimes we'll just buy it directly from the wholesaler. So that's another unique sort of value we bring to the table, is that you're not just dealing with like a haphazard wholesale company, with all due respect to people just getting started or don't know what they're doing. They're not able to buy. You should not even be really in the wholesale business unless you have the capacity to be able to raise the capital or bring in the capital, whether it be hard money or something else. So if I could say one thing to everybody here, it's really important for you to have a relationship with at least one hard money lender, ideally a couple or a few, just in the sense of like protecting yourself. God forbid if someone looks at you and says, well, you're just only a wholesale, all you do is flip contracts. You need to have the capacity to fund the deals and close on them if you had to, right? That's a fundamental requirement as far as I can tell and what my legal folks tell me. So that's something very important. But the other side of what Nathan was asking was joint ventures, as far as, let's say we have a deal under contract and he's got an investor buyer. So Nathan, for you and for anyone else, it's very important for you to be in touch with our dispositions team and to say, hey guys, I see you have a deal at such and such location in Hudson County, Essex County, wherever, and I'd like to see if I can get that to my audience. Now, there's some rules we go by, just like you would have certain, rules, I guess, if you were working with us in a different way, where we'd want you to kind of keep that marketing sort of refined and in tune to a handful or maybe a dozen folks that are reliable. We're not looking for anyone to take that information and propagate it all across the internet, because we kind of already do a lot of that in terms of how we market our deals. And we don't want to be competing with another wholesaler that's trying to help us sell the deal. It just doesn't make any sense. But if you have individuals or companies that you work with, whether it be small time investors or hedge funds, whatever, and you have relationships with them, and those relationships are stronger than what we have. If let's say we had the same person, I've had deals where literally the other guy brought the same person, but he knew them way better than I did. So he got the fee for half the fee or whatever it was in that deal, because he knew that person at a deeper level and was able to sell them the deal and make sense of it more than I could. So that's fine. I mean, because at the end of the day, we're all closing. So when I talk about collaboration and joint ventures, I mentioned before about the supply and demand. The demand, it's also on the wholesale side, right? We need to work together as wholesalers to work together and sell the good deals, the really good deals, not the ones that are quote unquote good deals. Now, I'm going to draw the line, and I'm going to now get into a little bit, and anyone who wants to exit, I'm not telling you how to leave, but if you don't feel comfortable talking about anything to do with joint ventures in terms of renovations, you don't need to know that. You're welcome to leave, and I appreciate you being here. But if you want to hear more about joint ventures with respect to rehabbing properties and how we operate with that, I can share some details in this group for the conversation today, and then we can talk individually to anyone that needs help with additional. But fundamentally, the wholesale part we just spoke about, the joint ventures in terms of how we work together with folks that want to, let's say, either bring a construction resource or bring capital to a project. Usually that's one of those two things. Sometimes it's a deal, but usually it's either construction or capital or both, right? Our business is set up at Douglas J Development, where we do the renovations, redevelopments, and the small developments. We have a subdivision we're doing in Central Jersey. We mostly do single family redevelopment though. And so basically it's set up in a way where we take ownership of the property. We own the property. We close on it, right? And we typically use hard money to buy it. We use hard money, which gives us like somewhere between 80 to 90% leverage in terms of the purchase. And then we get 100% typically funded of construction, like most hard money lenders will lend. But fundamentally, there's what we call the gap that exists. And I've done a few videos on the internet you can find on YouTube about this at a high level, talking about different ways you can partner with us. So I'd recommend you guys check out our videos on YouTube. I don't know the link. If someone from the team could pop it in here, maybe that'd be helpful. The link to the playlist that talks about joint ventures, and also the link that talks about Flip More Deals mentorship. That'd be cool to have for the group to see. But on the side of the joint ventures, right, we typically find that folks will come in with whatever amount of capital, for example, to fund a particular project in the gap fund portion, meaning that you know, let's say the project is, I don't know, $300,000 purchase, 100,000 renovation, it's going to sell for 550 or something like that. So I don't know, the numbers make sense, but just say they made sense, and the hard money lent us, you know, 90% of 300, which is 270, and they lent us 100% of the 100 grand that we need for renovation. So the loan amount, it doesn't really matter that much, but it's roughly like a little under 400,000, I guess. And so essentially we'd still need some money though. We need that $30,000 if that was the case. Plus we need closing costs, we need carry costs, we need interest payments. We need the first payment to the contractor. We need a lot of different capital requirements to basically fund the rest of the deal and complete it. Now, fundamentally, what that means is that you coming in as a potential gap funder would partner with us in a way where we would give you a certain amount of profit share, and we'd have other protections to put in place, which we can talk about individually. I can't share specific numbers, and I'm not going to go into much more detail until we get to know each other a little bit, because I'm governed by certain laws that exist. If you don't know by now, there's certain regulations that exist, and we're not a fund. We're not like a real estate investment trust. We're not a registered security with any government agency. So it's individual, one-to-one, you know, working together partnerships is how we structure things. That could possibly change. I'm not saying it's definitely going to change in the future for us in a good way, where we're going to actually structure something that's going to be bigger, but that's more to come. That's something that's in the works. I'm just going to say it like that. For anyone that, you know, wants to talk more about it, we can speak about it. But fundamentally, as of right now, at the end of 2020, you know, we have about a dozen projects that are under construction, mostly in Northern Jersey, Central New Jersey, and we are looking for more folks that have either a deal, you know, they have capital, or they have construction. Those are the three things that anybody that's in this business would need more of. There's never enough of any of those three things, really. So if you have one or more of those things and you're looking to work together, I'm happy to have a conversation. The right person to speak to about that would probably be Dana, possibly Rich as well, or myself. And then you could also reach out to anybody at JDL. We'll redirect you to the right person to have a deeper discussion. Does anybody have any questions about that right now that we can talk about in detail?
No, I just wanted to ask, to whom do I need to contact in order to do a JV? If I have a deal that I wanted you to look at it and see if you would be interested in joint venturing on getting it out to your buyers.
Yeah. So just to clarify again, Nathan, you're talking about joint venture in terms of a wholesale flip?
Right.
Okay. Yeah. So we'd be happy to talk with you about that. What you can do is send the details over to sales@jdlventures.com. That will go to the right people in the office, sales@jdlventures.com. And essentially they'll reach out to you with some questions. We, you know, our process is very simplified. Like we ask for obviously the information about the property, the details you know about it, the beds, bath, all that kind of stuff. As if you're the seller, then we want to know that you have a contract on the property, that you're in touch with somebody who has a contract. We'd like to evidence that with an actual contract, which you can redact. You can black it out, and you don't have to show us exactly the numbers if you don't feel comfortable for some reason, or the people's names, phone numbers, whatever, contact information. Just show us a contract that was signed that shows evidence that you have it under contract, so we know we're not spinning our wheels together. And then from there, we enter into a certain contract with you, which my team can talk about specifically, to have the opportunity to be legally bound to that, to perform on the contract under certain conditions. And then fundamentally, we begin the process of actually putting together a marketing package, getting more details and putting together a marketing package. We need to know about the access. There's another big thing that people don't always provide. If we can't get inside of a house, frankly, we're dealing with less than 10% of the population of investors that will buy sight unseen. So it's probably not worth our time if we can't get access, although it's possible sometimes if a deal is good enough that people will take that risk. But generally speaking, we need access, and we need to have at least 1 or 2 appointments to get inside. So if that's not possible, that's another problem. And we also want to make sure that we understand the fee structure. So if you have, like, let's say a couple $1,000s of a wholesale fee, to be honest with you, we're not going to be interested. But if you have, let's say $10,000, $20,000 wholesale fee at minimum that you can share with us, then we're happy to do that. We typically don't like to mark up a wholesale fee if we can avoid it, because it creates a problem. We share that information with our investors, and then by chance, if they stumble upon your information somewhere after seeing ours, it creates a problem where we become more expensive, and obviously they're going to contact you who's less expensive. So that's just not a good thing either. We like to be able to share, like, truly joint venture on the wholesale fee as well. So my team can talk to you more about that specifically. Does that make sense? Is that too much or not enough?
No, that's perfect. Thank you so much. I appreciate it.
Absolutely. And a quick plug for Investors First Title. So even if you're a wholesaler like Nathan, we're happy to, get the order in. If you want to send it over to info@investorsfirsttitle.com, you're welcome to send over a contract that you have signed with a seller or whatever you have that's going on. If you don't feel comfortable doing that right in the beginning, but let's say you have a deal that you're working on with a buyer and you want to get the process started, Investors First Title can handle all of the title work. They don't have to order the searches until you tell them to. The process is super quick. We've done closings in as little as 5 days. Legitimately, like, if it's a cash deal, typically the requirement to get done sooner like that, like, is 5 days, is basically not to have an appraisal. If there's an appraisal involved, but a hard money lender, typically it takes more like 2 to 3 weeks, because of scheduling and getting reports back and all that kind of stuff. But with respect to anything that's a cash transaction, which is a lot of what we're seeing with certain areas, especially like in Newark and East Orange, a lot of cash investor activity coming from New York specifically. And so a lot of folks that are buying with the title company, using the title company, don't have that requirement. So we get closings done super quick. Title search can be back in a couple of days. Title commitments issued, and then a closing set, and everybody shows up or does the signing. I've done a bunch of remote closings, being that I'm in Florida now, and I'm not yet back to New Jersey. I'm coming back at the end of this month. So basically, it's interesting. I'm learning what it's like to be a remote investor. And Garrett, I think, made a good point before about flipping remotely. And I have to say, I'm doing a lot of that right now. My company really is the one to give credit to, though. I have a lot of folks that are great people helping run those projects and make it happen. So anyway, that's just some information, quick plug for Investors First. Again, it's info@investorsfirsttitle.com. Just send over whatever information you have, or if you're not even sure if you have a deal yet, you're not ready, just let us know you're looking to work with us, and we'd love to help you out. I think I covered that question pretty well. What any other questions?
Yes.
Go for it.
One last comment, you guys. Something you guys, earlier on, you talked about the current mortgage interest rate of 3.4%. All right?
Right.
In August of 1982, I was moving back to New Jersey from Texas. My employer had sent me down there for 6 years. But I was coming back to New Jersey, to this house I'm in today. The interest rate that they quoted me at the time, the best interest rate, was 21%. Have you ever heard of that kind of situation? I finally wound up coming here in October, moving and getting a mortgage at 15%. Point is, that 3.4%, that's a great rate, and that's lots of business and lots of activity for you guys. Good luck.
Sorry, I was on mute there for a second. It's really inexpensive capital as far as borrowing mortgages. I mean, hard money also, relatively speaking, is very inexpensive. I know it sounds maybe like a lot for those of you that aren't as familiar with it, but paying like 9 or 10% interest on an annual basis, if you're doing a project and it goes well and it's a quick project, you're going to effectively pay somewhere between 5 to 6% on almost 90% of the project, we'll say, that you're going to have a total cost. So that's super cheap capital relatively to, you having to dump your own capital. If you have a bunch of capital sitting around, it's usually a good idea to look to leverage if you can. I'm not saying it's always the best thing to do, but you got to consider it and see how you can stretch out your capital and be able to use it on multiple projects. That's something to really consider as well. All right. Any final thought or question from someone that hasn't had a chance to ask it yet? Cool.
I just wanted to say thank you so much. Very, very good comments and very good knowledge, and nice meeting you.
Likewise, Nathan. Thank you. Appreciate it, man. And thank you everyone for being here. Thanks for the great questions from a handful of you. Thank you, Paul. I know Caesar was here talking before as well. Thanks to the JDL team as well. And remember, guys, if you could just contact the JDL folks about whatever it is you're looking for. If you don't know which email to send it to sales@JDL Ventures. That'll get directed to the right person. And if you want to check out something I'm working on for next year, that's all related to what we're doing, you can check out my personal branded website, which is douglasjbeck.com. I'm offering it to I'm offering what we do as far as mentorship and consulting to a wider audience. So if you know someone that could benefit from that, I would definitely appreciate an introduction, or if you can benefit from it in some way, basically looking at all the things we've learned over the past almost 7 years and helping other entrepreneurs and business owners take it to the next level, as well as bringing them into real estate investing to help us do what we do. That's what we're looking to do with douglasjbeck.com. So looking forward to really propelling that forward in 2021. And I'm hoping that I can help some of you guys out as well in the meantime. Talk to you all.
Thanks, everybody. Thanks for the information, Doug.
You got it. Thank you, Caesar. Looking forward to getting that deal closed, man.
You got it.
Talk to you soon.
Thank you, Doug, and thank you, everyone.
Good night.